Check, check, 1, 2. What is up? Yo, check 1, 2. Yeah, check 1, 2. Whoa, whoa, what's up? Yo, we coming on live, baby. What's up? What's up? Big Surge in the mix. What's up? All right, traders, what's up? What's up? Good morning. Happy Monday. It is a new month. It is a new quarter. It is a new week. What up? What up? What up? What up? What up? What up? I'm Shimano Trader. Welcome to the spread. We're hanging here live. We're doing some pre-market premix, listening to some tunes. Tap in, baby. Yo, all right, let's do this. For sure. All right, traders, good morning. Welcome to the show. I'm Shimano Trader. What's crack-a-lackin'? Yo, what is crack-a-lackin'? All right. There we go. All right, guys. Hope you had a great Easter. Hope you had a wonderful Easter. All right, welcome to the show. I'm Shimano Trader. Welcome to Spread. This is a live trading show Monday, Wednesdays, and Fridays, 6 a.m. to 9 a.m. Tap in, baby. Don't forget, we got a new poll going on. Want to see how you did first quarter of 2024. And we're going to get into some news, and we're going to do some pre-market prep. And yeah, man, let's see what the week has in store for us. All right, this thing is gonna show. Oh, we did blow up the SPY already. Wonderful. All right, man, let's do our levels here. So last week we have our pre-market lows here. Activate this mug. It's gonna be our previous day lows right about here, right? Like this zone in here. All right, and then we have our pre-market high, our previous day high, I mean, which was probably like right here, right? Yeah, right there. All right, that is your pre-market, your previous day high right there, and this is your previous day low. So we're just doing our SPY setup here. So we're going to grab our previous day high, which is this green bar here, and then we're going to grab our previous day low. Previous day meaning last Friday, right? And then we're going to grab our pre-market low. Put this mug right here. This is just for the SPY. I always like trading the SPY. I don't do really well on the SPY, actually, though, to be honest. And the reason is because I do zero DTEs. There's no other reason for it. That's what it is. The zero DTE game is it's a very treacherous game, guys. Very treacherous. And I think it's the gambler in me that doesn't let me stop that. It's a bad habit. All right. So that's our pre-mark. That is going to be our setup. Now let's look at the. I'm going to look at the move for SPY today. Like, what's the anticipated move for SPY today? And today is $2. We got a $2 move up or down on SPY today. So let's go to our SPY again. $2 move. So from 523, so it'll be 5. So let's do that. So it'll be 525, 525.07. That is your move for the upside. It's gonna be 521. to the downside. All right, guys. I don't know if it's me. Sometimes the music sounds really loud in my headphones, so I'm still learning how to play with that. Y'all let me know how it comes across the sound, though. I hope you guys can hear my voice and hear the music at the same time. All right, we're going to do here 521.07 on this one, right? 521.07. All right, that is going to be our range for today on SPY. So we got 525 to the upside, $2 to the upside, and then $2 to the downside. That is going to be the expected move for today. In all honesty, should be here, 525.07. That's kind of like the daily. That's what the move is going to be for the day. Expected move on the SPY for the day. All right, guys. Hope you had a great Easter. Hope everybody found their eggs, found some money. Yeah. All right, that is our SPY setup. Also, getting ready to possibly, have not made up my mind yet, of doing a class for the upcoming boot camp that Sean's got going on. So I want to do like just a real basic option class. Just teach about options, real option trading, like really down to like the simple stuff, just real simple stuff. Just cleaning up my chart here. Can't move on Boeing, dude. All right, let's move over to this chart here. Going to be studying some new stuff today. Let me see if I can move it over on. There we go. Sliff, right? All right, perfect. Yeah, this is where I want to hang out. So I want to spend some time this week. I'm gonna try to stream a little bit more this week. Sean wants us to keep streaming. He wants us to keep teaching and keep showing what we're doing. So that is one of my goals this week, is to try to stream a little bit more. But more importantly, I'm learning how to read the tape, and I think reading the tape is something new for me. Sometimes I find it difficult at times too, but it's part of the game, y'all. Y'all gotta learn. All right, what's the expected range for Boeing this week? I wrote it down here somewhere. All right, Boeing, we've got 577 on the move here. So let's. What do we got? We got a couple of minutes till the next. We got a couple of minutes this here before market opens. I'm a little behind on my charting because of Easter, No, what am I doing? Okay, so we've got on BA, we've got a $577 move. All right, so let's just. I'm gonna make it April 5th. But so I took a little mini class over the weekend. Shinobi Trades. Yeah, Shinobi Trades. We're just going over some basic stuff about option trading and how to trade options, but like to the very, 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 very basic level. Talking about opening up a brokerage account and understanding how to read option chain, the deltas, the Greeks, as they like to say. But more importantly, he was teaching you how to read the tape, and I think that was very cool. I 182.99 on the Boeing, 192.99. We're gonna add. What we say, 577? Yeah, 5.77. So you got 198.76 to the top side. 198.76. Yeah, and then to the downside, I should say 4 or 5. Oh shoot! All right, and then select that and copy it. And then we have 192.99 at the downside. So let's bring up our calculator again. Of 192.99 minus 5.77, we get 183.22. 193.22. All right, so there's our move for the week. There it is. I don't even know if that's right. Why is that? So I'm doing something wrong. I have to be doing something wrong. 5.77. So 192.99.5.77. 198.76. We got that. And then 192.99 minus 5.77. Ah, that's what it was. 187.22. There's where we did wrong. 187.22. There we go. All right, so new month, new quarter. I don't know how you guys did for quarter one, month one. I was not profitable the first quarter. I was not, I lose a lot of money, but I'm not really happy with the performance for the first quarter. I'm trying to identify why, and I think a lot of it has to do with just, I don't know, just not being patient, I guess, is kind of what I got to say. So they got to stay patient, man. Being patient is the name of the game. All right, so we have here what, Boeing. Okay, so that's our weekly range for Boeing. Going into the week, we're going to have news here, market chatter, Airbus seeks stable relationship with supplier systems. Yeah, nothing but bad news on Boeing. All right, so I've been learning how to what they call read the tape, right? So this is your level 2 here on the bottom right. This is called your level 2. This is these are orders that have not been executed yet, meaning that these are orders that are yet to be filled, right? So this is what they call the tape. I'm sorry, the level 2. And then on the right here, we're gonna have the tape. So this is what they call the tape, right? So this tells you what is the size of the shares being bought and also at what strike price. So usually what's being shown here on the bottom right, this is what the order, for example, you'll say here, hey, somebody has I think you have to multiply by 100 here. So somebody has 100 shares here, or 100 shares sitting here. There is an ask of 203.15. Right, so right now we're at 192.99, right? And somebody's already saying, hey, I'll sell you my shares, my 100 shares for 203.15. Are you willing to buy them here? That's a one. See this one here, this one's 600 shares at 193.65. That people are, hey, there is an ask, right? Somebody's asking. Here, somebody's bidding here. This is the bid here. Like somebody's bidding 182.89, 182.89. They're placing these orders. These orders are yet to be filled. Right, so in the stock price right now is 192. This is a $10 difference, right? So hey man, I have a bid out here for 182.89 for 100 shares, right? But it doesn't mean it's going to get filled. And then I was also learning about how they'll flash you to scare off buyers and sellers. They'll be like, oh shoot, there's a big order sitting there. Somebody's there with a big order, and usually that's not the case. So anyway, so that's kind of what I'm learning. I really don't know where my picture's at. You guys got to give me feedback if my picture's in the way. Oh no, my picture's not. My picture's a little bit in the way there, but it's not too much in the way. Let me see if I can move it. Let me see if I can move it here. Maybe like right here. Maybe like right here. Probably be a better spot. All right, y'all tell me though if that looks okay. But anyway, what I've been learning this weekend, I did a little bit of studying. So obviously learning the tape. So this is going to be my new setup when I'm actually placing a trade or analyzing a trade, is to pay attention to the tape, pay attention to the level 2, meaning the orders that may or may not be coming in, and utilize that. And I think Shinobi was talking about how that gives you an edge, right? That's going to give you an edge in the market because you can actually see and before executing a trade, you kind of have, I think we've talked about this several times over the last couple of months that I've been streaming about, kind of like a checklist, like a pilot has a checklist, right? So a pilot has a checklist, meaning, oh my God, like if there's an engine failure, there's an emergency, whatever, we tend to panic, right? Especially as traders, we might say, oh, it's a panic sell. And then we start freaking, we don't know what to do sometimes. And that's just being real, right? Like we don't know what to do. We're in a trade, stuff's happening. Sometimes we get stuck. And I think what's important, or what I've been learning here, is to have some sort of like a checklist, right? Like, or things that you do before you get in a trade or out of a trade. Also, another thing that I learned that was really key was You need to set your stop loss, especially in option trading. You need to set your stop loss when your chart invalidates, not necessarily when you go red, right? So sometimes we have a trade that we're in and we're like, oh, we don't know, or we don't identify that as being wrong in our trade until we see red in our P&L. So our P&L showing us red, oh my God, that must mean that I did the wrong trade, right? So instead, he's like, no, like pay attention to the to your chart, right? If your chart and your strategy is invalidated, then you don't need to go red. You need to get out before you go red. So that was key. That was key for me. So anyway, and then identifying levels, market structure, market change. Anyway, 6:17 right now. I'm a little out of the routine for the morning thing just because I want to switch things up this week. Honestly, God, I want to switch things up this whole quarter. So anyway, track my winners and my losers. We got a poll here going on in our page, guys, about how you did quarter one. You know, how was your first quarter of trading in 2024? Did you do good? Did you do bad? So just curious to know. So let's see if you guys can participate in that poll. I'm just really curious to know what the audience is experiencing while trading. Anyway, this is the Boeing chart here. Obviously, Boeing has hit a bottom down here, and I'm using Boeing because Boeing has been really good to me this year. This first quarter this was my best stock that I traded. So obviously, I learned a lot about. There's a lot of issues with it, a lot of bad news, but ever since they fired the CEO, it seems to be like on a little bit of a climb. Oh man, let me see. Anyway, reading the tape, right? So here's your orders, and this is telling you the orders that are being, this is the bid and the ask, right? This is the orders being, people buying and people selling. So just paying attention to the tape. I'm saying paying attention to level 2 and then paying attention to the tape. For example, here, right? Like, look, people are buying the stock, buying the share, and also at what speed it moves. So yeah, so we're gonna be watching this here. All right, man. But let's say it's 6:20. We got about 10 more minutes to the market opens. Let's talk a little bit about the keys to the trading day, and let me put that up here. Oh man, you gotta go through the news, man, because there's so much crap out there. All right, so Boeing got Boeing on watch here. Market chatter: Airbus seeks stable relationship with suppliers like Spirit Aerosystems. All right, so we're gonna keep an eye on Boeing here today. Or this, just like I said, it's been one of my best trades. So I want to try to kind of double down on it a little bit here. All right, here we go. Sorry, guys. I was just trying to get organized here. Sorry. I got a little distracted with something. My bad. All right, guys. Keys to the trading day. This is brought to you by Verified Investing. The equity markets are set to open slightly higher as the new quarter begins. The first of the month and quarters are usually up days as new money flows in to 401ks and other monthly plans. That's key. Sorry, guys. I got this nose itch, man. That just drives me crazy sometimes. Okay, so the equity markets are set to open slightly higher as the new quarter begins. The first of the month and quarter are usually up days as new money flows into 401ks and other monthly plans. So that is key. So expecting an updated date just based on the fact that usually, historically, first days of the month, first of the quarters are usually up days. March marked the fifth straight month of gains with the S&P up plus 3.1%. So March marked the fifth straight month of gains with the S&P plus 3.1%. So we've been on a tear. China manufacturing activity expanded for the first time in 6 months, also a good sign. Tesla announced that $1,000 price hike for its Model Y cars in the United States. So Tesla's upping their price on the Tesla. Let's check that out. Let's just put that on the chart here because we were talking about it a little bit. We're actually in Tesla. All right, so Tesla has had a price increase for the Model Y in California. ISM manufacturing PMI will be released at 10 a.m. Pacific. So we've got data coming out here at 10 a.m. Pacific today. We've got data coming out today at 10 a.m. Pacific. Bitcoin has a weekly, monthly, and quarterly close above the previous all-time high of 69,200. So Bitcoin, guys, where's Bitcoin at this morning anyway? Bitcoin is currently sitting at 69,763, 69,763. I see it consolidating at these levels here. It's actually been consolidating for a couple of days. So yeah, Bitcoin, man. If you got it, add to that position. Not financial advice. You will lose money. All right, and gold makes another new all-time high resistance just above 2,300. So metals are in. That is your news for today. Verified investing brought to you by Gareth Soloway's company. All right, traders. Don't forget to answer our poll that we got at the top of our page. We want to see how you did for the quarter. For the quarter, how was your quarter one? Was it profitable? Was it red? Let's talk about it. The good thing is I'm not getting flagged for this live music. That's pretty good. How's it sound on the OBS? All right, there we go. There we go. All right, traders. So that's what we got going on right now. You got the news, and you guys got the Bitcoin thing, and we talked a little bit about the new chart setup that I've been sharing here. Let's do the Tesla range while we're here. So this is our Tesla range. Let's move this sucker forward. All right, let's do Tesla here. All right, so the weekly move for Tesla. So we already did Boeing. And let's look at Tesla. Tesla's at it's an $11 move for the week, 11.08. $11.08. 186.87 to the upside. And then to the downside. 175.79. Oh no. Whoa, 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 whoa. Got all crazy right there. 186. Is that what it was? I'm tripping. 175.79. 175.79 minus 11.08. 164.71. That's what it was. All right, that is our bottom of the range for Mr. Tesla. No. Okay. Back to hourly, right? Back to hourly. Oh no. All right. Yep. That is your hourly now. So even though Tesla is reporting that they're going to be hiking prices on their Model Y, there's really not a lot of price action, a lot of movement here pre-market. Reading the tape here, this is stuff that I'm talking about here, right? Look at this 20. Somebody's asking. It's got a 20 That's 2,000 shares right here. That's 1,000 shares. 176.65 on the ask. They're asking for that. You can get somebody's bidding here. 2,000 shares here at 175.20. Where are we sitting at? 175.95. Yeah, so they're willing to. Yeah, so that's one of the things that I'll be doing different this week is different setup on the charts, and also reading the tape and reading the charts. Yes, look at these things being filled here. All right, got about 3 more minutes to market opens, guys. 3 more minutes to the market opens. Good luck, everybody out there. All right, good. I'm not being blocked because of my music. That's good. That was a mix, though. I don't like that. I guess it's not too bad. All right, so look at this. We're looking at the bid, looking at the ask. Look at this, 943. Wow. 176.23. Wow. Is that going to get filled? Did it go away? Did it get filled? Oh, here it is. 943. Like 176.3. 943. 944 now. Somebody's selling 943. So that'll be 94,000 shares at 176.23. That's crazy. This order right here is wild right here. Yeah, so that's what I'm gonna be learning, and that's what I'm gonna be kind of focusing on this week is reading the tape and understanding the tape. 943. See how we never seen that order get filled? Oh, it's still here again. Look, 943, 176.23. Because price is down here. These are the buyers here. These are buyers and these are sellers. All right, we got 1 more minute to market opens, guys. Good luck today. Good luck, traders. Got about 30 seconds until the market opens. What are you gonna be doing today? What are you doing today? All right, good luck, traders. All right, SPY selling off at open here. All right, guys, A+ setups only this week. Remember, we got a new poll top of our page here. Just curious to know how your first quarter was in trading. So please participate in that poll. Good luck today, traders.
Good luck, traders.
All right, keeping an eye on Tesla here. Oh, Tesla's selling off right now. Everything's selling off. Boeing's selling off right now. Tesla's selling off. All right, SPY here testing that pre-market low. Boeing, big candle on Boeing, down $2 already. Reddit continues to sell off. That's been a good one for us. Nice. We got a Reddit short going as well, long term. Oh man, it's all about Mother's Day now. That's what everybody's gonna be talking about. Boeing, big sell off on Boeing right now. Tesla, big candle on Tesla too. Big red candle on Boeing, guys. Boeing selling off pretty hard right now. Down to 1.2% already. Lyft selling off as well. Reddit, we have a big, we have a short on Reddit. That's actually doing pretty good right now. Pfizer selling off as well. PayPal. Yeah, there's red in the market right now. At least the charts I got up. Seeing Tesla here. All right, Tesla's bouncing here. Not terrible. A little bit of gap here. Oh, look at the level 2 light up. All right, bid 174.80. All right, it's your green. Oh, nice little pop there on Tesla. Little dip buy maybe. Yeah, Boeing selling off. Seven. All right, little bounce on SPY here off the pre-market low. Actually, right before the gap fill. Crazy. All right, Reddit continues to sell off. That's good. What's going on here with Tesla? All right, nice little recovery here on Tesla and that morning sell-off. Again, we're learning this week how to read tape. So this is the tape, and this is level 2. All right, ADM's popping right a little bit right now. ADM with a pop. These are chips. ADM had some really funny activity closing the first quarter. Oh, Target 180, 186, new high. Selling off. Russell selling off pretty hard as well. Hope you guys had a great Easter. How was your Easter? AMD looks good right now. ADM is trying to fill a gap. ADM, not AMD. PayPal sell off down 0.8%. Russell selling off. That's interesting. Apple also looking a little weak here. Yeah, Boeing selling off pretty hard. Oh, we already did the week for Boeing, huh? We did. Let's just put it up here. That's what your Boeing looks like right now. This is an hourly chart. We have a little gap here. Maybe push this to left point, right point. To the end of the week. All right, so there's this gap here that got filled by Boeing, right? So we're paying attention to levels, market structure, the tape. We have here somebody asking 192.10. See if that gets filled. Yeah, this is where it got filled. This is a big time level here. Oh, look, it got all bought back up. Oh, cool. They ain't blocking me. All right, so we're just continuing to watch Boeing here, see how it plays out. I mean, the range is 187.22 to the downside. And then we have 198 to the top side for this week. Just trying to pay attention to see what it does here. Maybe a bigger sell-off coming. All right, we're going to take some puts here on Boeing. 190. $192.50. It's going to be our strike price. $182.50. I'm sorry. So we've entered our first swing puts for today. Not financial advice. You will lose money. I'll put it red. All right, so that's this is our target for the week. So obviously we would have to get below the range to get there. So it's a pretty aggressive buy. We'll see if we can get, again, we don't need the entire move, right? We don't need the entire move. We just need to get some of that move. Watching the tape here. I mean, that'll be quite a move, right? So over $10, over a $10 move. It's a little mini baby gap up here. Looks like everything's bouncing. All right. Don't forget to subscribe to the show. Thanks for hanging out with us today. Happy Easter. Hope you had a lovely Easter. Ask 192.16. So I'm learning. One of the focuses for me this week is be like learning how to read the tape. So that's what I'm trying to do here is learn how to read this tape. Let's go. All right, guys. Hope you're having a good day of trading. AMD's popping up $3.87 already. Wow. Nice pop on ADM. I'm sorry, AMD. Biggest sellers 182.18 here. Just learning how to read the tape here, spending a considerable amount of time this week learning how to read the tape. Just watching what I've learned this week, trying to apply what I've learned this week. SPY bounced off the pre-market low. Lyft looks pretty good here too. Lyft looks like it's getting ready to take off. It's going to bounce, breaking the downtrend. Apple selling off 170.45 down $1. Tesla's not doing that great. Oh, look at that Boeing. Looking good there. All right, Boeing looking good here. Looking at the bid and ask here. This is our bid here. These are times 100. So these are times 100 shares. And these are the purchases here. And then this is the actual trades coming through. 400 here. See, for 191.38. Probably this one right here. Wow, AMD's popping, guys. I'm going to add to my AMD here. All right, Boeing continues to sell off. That's looking really good here. On the bid here, got sellers on the bid here. A couple of buyers coming in also. But overall looking weak. Apple selling off. It's going to about to hit that 170 critical level here. Ooh, Target blow off. AMD still going. Oh, Pfizer's selling off too. AMD's the one to be in today. All right, guys, just making some trades here, some shares on my portfolio, just moving some things around right now. Thousand shares here. All right, things are looking good here. All right, cool. I'm not being blocked yet. Awesome. AMD is on fire today, guys. AMD is the play. Russell's down pretty big. Apple's selling off pretty hard as well. Yeah, but AMD's the play today. I think it's kicking ass today. Let's see if Boeing continues to sell off here. Look at this. Look at these bids. 180, 142. I want to buy it there. See, like the bid size more active. I like lift here. We haven't done the range for lift though, huh? We should probably do it. All right, let's do it. This is our, look at our lift. Wow, look at the bid. 18, 1943. Wow. There's the ask. Look at these large orders here. All right, we're gonna do the weekly move for lift. So we have lift is 130. It's not even that much of a move, dude. They've been rejected all this year. I don't know if we have confirmation yet. Let's get some lift. All right. Jumped into some lift here. $19.52. 19.52. We'll do 6. What is it? 4-1. All right, let's ride this baby. Looks like a lot of momentum here. So we're gonna do this. Lift was 130 from 1935. Oh, dude, I'm just being blocked. Shh. Okay. All right. Understood. Sorry guys, I got flagged for streaming my music, so I gotta switch it up. But that should help out. Oh, I got the one and that's all right. All right, going green now, baby. Let's do it. See if I don't get flagged again. Red is still falling. Good. Fall. Lift, a little bounce on lift. Good. How's Tesla doing? Tesla, all right, little bounce on Tesla. Good. Hey, Apple, man, at 170.12. That's terrible. Oh, I'm still getting the warning? I thought this was okay, though. No copyright. Okay, good. Yeah, all right, good. That went away. All right, Apple's selling off pretty hard right now. My stream was... Oh, look at that bounce on lift, man. I think we caught it. Nice. Bid. All right, cool. I'm not getting flagged. All right, little bounce. Look at the orders here in the bottom. These are all ass. These are all bid. People are willing to buy at 1958, 1961, 62. A little bounce on SPY. We got that little bounce on SPY. I mean on lift. That's good. All right, Boeing's continuing to sell off. Reddit. All right, we got that bounce on lift that we wanted. That's good. Our ADM continuing to pump higher. It's already going to hit the top. Oh, we don't have a range on AMD. All right, we should do the range on AMD. Oh, we didn't even do it on lift. Right? No, we didn't do it on lift. So let's edit this. And lift had it was 1935 with 130, so 2065. Ooh, red. 1935, right? And it's 1.30, 1805 to the downside. All right, that's your range. No, it's pumping, dude. Look at that. Look at the ask versus the bid. All right, good. My flag thing went away. All right, good pump on lift here, guys. Decent pop here. And we're breaking this this downward resistance that's been showing up. Oh, I gotta do a bit for that guy. So it's a little bit of a difference and a little bit of a breaking structure there. You see that? A little bit of a bounce here on that lift. Like somebody sitting here on 4,100 shares, 2021. They want to sell at 2021, and another at they want to sell for 4,100 shares at 2021. So like up here somewhere. Yeah, it's an interesting chart. Boeing's got a little bit to go. Should have down $5 on it now. Not enough time. And they pulled back a bit. Damn, the ADM's got 2 weeks to get to 70. Pfizer's selling off still too. Oh, we're done with the calculator, at least for now, right? Here's Boeing continuing lower here. Looks good there. Boeing looks good here on that sell-off. The SPY is consolidating right now. That $9. Stupid. Dumb. $20.21 is a good spot. On just a little bit of a pullback there on lift. Boeing still looks good here to sell off, huh? How we looking on Boeing here? How's volume? Our puts are down here. Oh, it's recovered some. That's good. 191. Yeah, see, it's a little bit starting to pick up a little bit on Boeing here. Yeah, we're break even on our puts now on Boeing. Dude, we've got this little channel here, and we're just watching the tape, and we're trying to stay patient. Bids. So Boeing is breaking through this gap fill here that's happening. All right, so we're breaking this gap. That gap got filled. It got rejected. It came up to there, got rejected. It came up here, a little spiked up. There was a bigger gap fill up there, got rejected, and it came back to this gap fill, rejected, and it finally broke through. It's filled. It filled it, right? It filled it here, and it got rejected, and it filled it again, and it got rejected. So we're seeing what it's going to do now. Oh, shit. What happened there? Did lift tank? Oh, yeah, lift's tanking. Reddit's continuing lower. That's good. AMD with a little pull there. What's our average in AMD? Yeah, lift purchase. Pfizer selling off too. All right, traders, where we at? Where you at? Remember, we got a poll going on right now for the first quarter. We want to know if you did green, red, or break even. We currently have Boeing on the screen here. We are short on Boeing. We have puts for this Friday, 182.50. Also practicing our, just want to learn how to read the tape. So one of the things I'm going to be focusing on this week is reading the tape. So this is your time and sales here on the right hand side. On the bottom right, you have your level 2 data coming in. So I always watch traders keep this up, and I just spent some time this weekend actually understanding and trying to understand how to read it. So that's what I'm practicing today. So on the left side here, you have your bids, and then you have your ask. These are the orders that have yet to be filled. These are limit orders that have yet to be filled. And then on the time here, the time and sales here on the right hand side, this long one here, these are the sales actually being filled, right? So those orders being filled. So this in combination with some of the price action here should help you form an edge on the market. And I think each one of these is multiplied by 100. So kind of gives you an idea what's going on here. And also learn that they fake orders. So they'll have like a big order on the exchange that doesn't actually get filled. It's just put there to scare buyers and sellers. It's a rigged game. You guys know this. You guys know this is a rigged game. That's why you got to learn the rules. And then Lyft is retesting. Oh, I don't have Lyft on the board there. But, SPY breakthrough. SPY is hitting previous day low now. So SPY is selling off a bit here. Just broke the pre-market low. And AMD has been a good stock today. It's up over 2.5%, over $4. We actually added to our shares today. All right, just sending some motivational stuff to the family. All right, so anyway, we're reading the tape here, right? So update market chatter. So looks like the sell-off for Boeing is intensifying, right? It feels like it's actually catching some momentum. We're still red on our trade, but this looks really good here in regards to the momentum to the downside. So we're gonna continue to watch it. All right, man. 706 on the West Coast. I am Shimano Trader. This is The Spread. We are a live trading show Monday, Wednesdays, and Fridays, 6 a.m. to 9 a.m. Pacific. I am Shimano Trader. You can follow me on Instagram at Shimano Trader. It is a new handle, so if you want to follow me there. If not, no big deal. But anyway, today we are actually watching Boeing is our trade for the week so far. We've executed it this morning. What we are trying to do is we're trying to catch 182 strike price for Friday. We felt that the move here on Boeing has been significantly up to the upside. We've created a channel, It is butted up against the channel, and now it's starting to get rejected from the channel. We're also learning how to read our time and sales on our Thinkorswim platform here, reading the tape, as they like to say. So we are learning how to do that. Yeah, thanks for joining us today. We also got a poll going on at the top of our page. Please subscribe to our page and support us. We are thinking about doing a lesson for the upcoming bootcamp here with Sean. So we want to do that. We want to do that class, and we just want to get an understanding about where people are at with their education and their experience levels. So I want to know how you did for quarter one. Did you do good? Did you do bad? Did you make money? Did you lose money? Yeah, that's the poll that we got going on right now. All right, pull back on lift. We thought we had a bounce on lift off the break of the downward resistance. I'm gonna put this up on the chart so you guys see what I'm talking about. So this is Boeing. So let's put lift up here. So here's lift. We have a pretty downward resistance happening here. It's been going on since March 21st, where we hit the high, and we've been selling off ever since. So rejection, major rejection here. But today we had a breakout. We had a little bit of a breakout. Now we're down to the now we're going to see if this is going to turn support or if this is going to continue to be resistance for us. So we've broken out. Did not wait for confirmation on the 1 hour chart. So now we're retesting this downwards resistance line and see if we can get a bounce there. Reading the tape here, we see there's a lot of buyers here at 1926. We have a ton of buyers here at 1926. So we should probably get a bounce here. We'll see. And then we also got a lot of sellers at 1933. We got some sellers happening right above this level here. So there's a good point to kind of see how the tape plays out here in the next few minutes. So this is what I'm trying to watch, right? Trying to watch the balancing here. Right, so remember, these are orders that have not been filled, and these are orders actually being filled up here. So look at this price level here. Like there's a lot of this, almost like a wall, right? Almost like a wall here happening. And we did get blocked earlier. We did get blocked on our stream because we were playing music. It's all right though. All right, so we're getting a little bounce here on lift right off the break, right? So we're getting some. Look at this, a big sell order here, 2021. So there's definitely activity happening here. I like this break though and retest. So we're gonna see how that turns out. Yeah, Boeing continued to sell off. Reddit continued to sell off. We have a long short on Reddit. We have a put contract on those guys for $35, and that's been working out well so far. This Boeing has been working out good today too. All right, so let's put what we're talking about. Sorry, we were talking about Reddit. Okay, let's put Reddit on the chart here. Look at the red on lift here. Just kind of fulfilling all these orders. Oh, we already have lift up there. What are we gonna do? Reddit. All right, nice bounce there. RDDT. All right, so here's Reddit selling off. Look at that. That's nice. We have a target price of 35 on this for April 18th. I'll check Bitcoin real quick. Bitcoin 69,792. I got a physical today. I did some quotes over the weekend. All right, Reddit continues to sell off here towards our target price. Good stuff. Lifted bounce off the retest of the resistance, just like we wanted it to. And then we're actually starting to make money on Boeing now. That's great. Lifted. I'm sorry. Pfizer did pop a little bit. Oh, we don't have that. Yeah. All right. Let's put the expected range on Reddit. What did I have? $6.71, $49.32. So, all right. Bear with me here as I do this. So I usually do this on Sunday nights. I did do the work. I just didn't do the charts. So you'll see what I mean right now. Oh, I should have just duplicated this. All right, so on Reddit, we had 49.32 was the closing price on Friday, so 49.32, and they're expecting a $6.71, so 56.03 to the upside. I'll just duplicate this. For the downside, it was 49.32. So 49.32 minus 671. 42.61. All right, so that's the expected move for Reddit this week. Right, that's the expected move for that, and it's selling off. Looking at the bids here, looking at the tape. Let's see. So asking, not a lot of people buying, but there's a lot of people selling. Do you see that? So that's the kind of edge that I think the tape can give you by learning how to read the tape, right? So you see, you have a lot of people bidding, right, to buy stuff, and there's a lot of asks. So people say, hey, this is what I'm asking. So these are your sellers on the right and your buyers on the left. You know, so you've got buyers at 46. You got buyers at 46.30, right? Right, and you've got sellers here at 46.40, 46.50, right? So you've got, these are your sellers here. These are the people that are saying, hey, this is what I'm asking for these shares. And then the tape is going to tell you what's actually being filled, because I learned that sometimes they'll just put a look like right here, right? You see these big orders here, but that doesn't mean that anybody's going to really buy. Bid at look 62, 60 to be 6,200 shares at 46. Yeah, interesting. All right, so we've done. Where's my ping? All right, so we've done Reddit. We've done Lyft, and we've done Tesla. Well, yeah, that's gonna continue to sell off. I'm cool with that. I'm cool with this thing continuing to sell off. But we had BA up here, right? BA was the one we had up here. Oh man, Boeing is tanking, guys. Look at that. Wow. So here is your. These are your buyers. These are your sellers here. And this was actually being fulfilled here. Wow, big sell-off on Boeing. Tesla, big sell-off on Tesla too, man. Whoa, Tesla's tanking. Looks like Pfizer recovered a bit. A chance to get into some more AMD here. Jesus. Yeah, Tesla sold off pretty hard right now. Wow, look at Boeing, man. Boeing's got a huge red candles here coming in. Watching the tape here. Yeah, it's pretty. It's gonna take a little bit of while, but it's gonna take a while. But I think understanding the tape is super important. Yeah, our puts are working right now. Pfizer getting rejected here. AMD is the only one that really looks strong to me right now. Lyft looks good too. But yeah, it looks pretty weak. This market looks weak right now. Man, look at that sell-off. All right, well positioned today. Wow, Tesla. Wow, Tesla. Good thing we got out of that a little bit. We lighten up the shares on that. ADM. Yeah, thumbs up, guys. Definitely. Yeah, Tesla's selling off pretty hard. It's probably bringing down everything. Apple's down pretty big too. Big red here on Boeing. Watching the tape here. See if we get to the bottom of this channel. Man, SPY's breaking the previous day low, so we are falling hard on SPY, bringing everything down. Everything's coming down right now. Look out below, guys. Yikes. Yeah, Russell's down 0.85%. Apple just broke the key level of 170 for the support. So, and then Tesla is breaking down as well. Careful out there, traders. It's red, sea of red. Tesla's huge dump on Tesla. Apple's breaking that key support, man. Trade carefully out there. Man, that Reddit short's printing, man. Oh, Lyft just broke through. Shoot, broke through that resistance again. I mean that support. It broke through it. Gonna be down on our share portfolio. Yeah, big flush, guys. Dow Jones down 200 over 200 points. Tesla, big drop on Tesla. And Apple's at that critical level 170. Reddit continues to fall here, hitting almost going towards the bottom of the range. Yeah, Reddit's up 136%. That's short. Now we're breaking this channel. You see this channel here is breaking down on the daily. Looking good, man. That put's looking good. Our Boeing put's looking really good. Here's our Reddit short. Trying to get down here. We've got a couple of weeks. We got about 2 weeks to get there. 3 weeks, actually. There's some good buyers at 46. You see this 46.01. There's buyers at that level. Sellers at 40, 52, 48. We're not even near that, right? If it's 52 here. $44.71. Interesting. Looks like most buyers are sitting at 46 and some change there. And 46 is probably a good floor. Right? 46, 45.98. You've got some buyers there. All right, Boeing's continuing to drop. Looks good. Well, 189. 189.77. Got a buyer there, 2,600 shares. Pfizer looking like a bear flag. Tesla still going down. Target's strong. Target's the only strongest one I have of all the things that I'm looking at. Target looks really good. That's retail. Oh, Lyft came back up. All right, I like that Lyft. Lyft came back up to retest that low. What is it? That's dropping resistance, I guess you can say. And SPY found some support at the previous day low. Looking at Boeing here, 189.80 is probably where we have some buyers, but mostly a lot of sellers though. A lot of sellers at these levels here. 100 shares, 200 shares. 189.77 maybe, where we have some support. Cold. All right, so here's Lyft, right? Lyft broke through this lowering resistance. It came and tested it. It's testing it again. So we've got some buyers here at 1929, right? And some sellers here, just 1932 is where we're at. Sellers. So we got some good 1929 buyers here. We've got a good floor there. So that's the kind of stuff that I've been reading about and studying to try to help us give us a little bit of an edge in the market. Is how to read the tape. Our Boeing continuing to drop. So we're up 25% on this trade so far. It's quite a lotto, to be honest with you. It was like almost like an $11 drop from where I got it at, and it's doing well. So it's a nice drop for today. It's already down 1.5%, almost 1.6%. Pfizer still showing weakness. PayPal showing weakness. Looks like AMD's pulling back a little bit as well. Reddit continues lower, down 6.5%. It's been on a nasty drop. Reddit has. Yeah, we're up 136% on that trade, by the way. It's really inexpensive trade. So here's the 189.83 bounce. We're looking at our bids, 189. Let's go. Still dropping. I honestly don't know if red means sell and green means bought. I don't know. I think I might have read something that's not as it's not as simple. Oh man, Bitcoin's selling off pretty much too. Yeah, everything's selling off right now, guys. Be careful out there. Tesla, big dump. Big dump. Hey, that's Tesla right now. Russell's down too. Yeah, Boeing continuing to drop. All right, Boeing continuing to fall. Good. Reddit continuing to drop here. Spies testing the previous day lows. It might break. Guys. Lyft is doing good. Lyft is testing. Tested that resistance and it bounced off of it, so that's looking pretty solid. Reddit continuing to sell off, down over 7% now. Yeah, AMD's pulling back a bit as well. PayPal starting to roll over, down 1.1%. Who's texting me? All right, market's been open for an hour now. 7:30. All right, Boeing continuing to sell off. We're up 30% on that trade so far. Trying to get to 182.50. Got a lot of downside momentum building here. So's Reddit. Reddit is also selling off. But we love to hear where you guys are from. Anybody joining us in the chat room today, where are you guys calling us from? Where are you guys calling us from? Where you viewing us from? Where in the country are you, or are you even in the country? That's the real question. We've had some watchers from across the country. I think Lithuania. I always mispronounce that, Lithuania. It's my Latino in me, bruh.
Do it.
All right, guys. Next candle here on what am I showing you guys? All right, no, Boeing. This is an hourly chart here, so you're gonna be watching this probably for. I don't know if maybe you might know. You get a next candle here? No, I think it happens at 8 a.m. 8 a.m. West Coast time. You'll get the next candle here for Boeing. But Boeing, huge sell-off on Boeing this morning. $3.44 to the downside. 1.8% to the downside on Boeing. If you are short, you are in the money, baby. Let's get it. We got a little bit bounce on Reddit. Let's see Reddit. We have a long short on Reddit, but that's a dangerous stock, man, because it's a new IPO. Reddit. There it is. Watching the tape here, we have 4704. No, that's really high up there. So we've got 4550. We've got some buyers here at 4550. All right, we got some orders, some limit orders there. So this is I think this is like a version of watching, you know how those people have those little I forgot what those heat maps. They look like little circles there, and they kind of tell you where the buyers and sellers are sitting. I think that's just like you got to be using this data here. Look at these buyers here. Each one of these is times 100. So you have 2,000 shares, 1,000 shares at 45.50. All right, guys, don't forget to subscribe to our show here. Subscribe to our channel here on Tradecaster. Love your support. Thanks for hanging with us today on a Monday morning. April Fool's Day. April Fool's Day. Don't get fooled today by the market. You don't want to get fooled by the market on April Fool's Day. That'll be foolish. All right, let's see if any checks come in. Oh, yes. We got a check coming today. Good. Oh, jury duty for my wife. All right, got some good stuff coming today. Finally got some checks coming. All right, traders, we are watching Reddit right now. Not a lot of, well, just what I'm trying to do this week is trying to stream every day. I'm trying to get that done this week. And I'm also trying to learn how to read the tape properly. So I did a little bit of studying over the weekend and was hanging out with Shinobi Trades. I think Shinobi Trades. And it was just teaching us how to read the tape.
Damn.
I know. Just teaching us how to read the tape and how to make sense of level 2 versus the time and sales. So what we've been learning here on the level 2 is, right, this is your bid, right? So these are people that are buying, and as these are people that are selling. And each one of these orders here, the size of the order, BS and AS, stands for bid size or ask size, is how many shares are being traded. So you have to multiply that times 100. And these are the actual limit orders yet to be filled. So if the orders haven't been filled yet, it works kind of like, oh, you can see that there's a lot of buyers at a certain level, but it also reveals to you that people can just be BSing you, right? They could just have an order there that has no intention of being executed, and it throws you off as an investor. You're thinking, oh, there's a lot of buyers, there's a lot of sellers there, but it says it takes a little bit of time learning that strategy. Oh, nobody's filled up my poll, man. What the heck, bro? All right, but in the meantime here, so we're watching the bid, right? So these are buyers of the shares. These are all buyers. These are all orders in the queue to be fulfilled, and these are all your sellers, right? So you see a lot of ones and a lot of twos, but on your, oh, look at this one, 250 at 49.62, at 45.62. Someone's buying 25,000 shares at that level there. That's probably because that is the, look, right? Like that is like the low, right? That was like the low. That's where the IPO, where did the IPO open here? I think we opened, this was the day, right? So it opened at 47. It's got a high as 57 and a low as 46. So there's a good floor here, right? There's a good level here. This is kind of where the market, kind of where it opened up. So now I think we're below the IPO price now. Right, so now you can buy Reddit right now below the IPO price, right? So I would start seeing the tape here, that's the level 2, and perhaps start seeing that they're gonna start buying at this level, right? Because this is where it opened. So it would make sense to me that this will probably be one of the bottoms for Reddit, or possibly the breakdown area. We'll see, man. This is the interesting level here. Look, all those orders got filled. All that got digested. Oh, Boeing continuing to fall. All right, man. I'm doing some money today on Boeing. Yeah, Boeing's been my trade of the year, man. It's burned me too. So here, more sellers here on the ask size, right? And less buyers here, right? So to me, right, and watching the time and sales actually happen as well, I've yet to connect these two together. But what I do know right now is that it's digested all the sellers, all the buyers have been digested, right? Here you have 23,000 shares here at 45.62 that somebody wants to buy. I just don't see them up here anymore. I don't see them here. Like once the order is, here's 200, look at that, 45.62, 23,000 shares here. 230 times 100. Yeah, 23,000 shares right there at that level. So big buyer here. Big buyer at that level. Did it get filled? See, I don't see 23,000 shares, bro. But look at the buyers here. So right, these are all the buyers here. I would almost want to close my short here, to be honest with you. That's how I feel. Like I feel I should close my short because okay, here's all the asks now. That order, I don't know if that order ever happened, that 23,000 share order. All right, Boeing's still selling off. SPY is now below the previous day low, which was Friday's low, so it's looking a little bearish there. Man, Boeing is a brick. Just look at Boye. Jesus, look at this. Wow, look at that sell off on Boeing. Look at this. We got these are the ask guys. They're all getting filled. We've got some support here at 189 even. We got 2,000 shares there. Somebody wants to buy 2,000 shares at that level. That's 189 level, right? So we're 12 cents away from that. Look, see the buyers starting to come in here at this 189, which is a psychological level, right? Those round numbers, they love those round numbers. All right, trade is where we at. Man, I thought I was on camera and I wasn't. That's funny. All right, B. There are BB. All right, Boeing is found some level of support here at that 189 level. We have a really big wall there, so we're watching that 189 level. Starting to get a little bit of a bounce here. We'll come back to it. Not Reddit though. Reddit is selling off. AMD came back to reality. Tesla is down big, almost 3% today. All right, we got buyers coming in here on Boeing. I'm going to close out this Boeing real quick. All right, we're gonna take that close there, and I'm taking this close, guys, because of the tape, right? That's why I'm doing it. So Even though I have a lot of time left, and I have a lot of time left, and I have a lot, because I have until the end of the week. But I'm closing it out today, and the reason I'm closing it out today is because of the amount of sellers here at 189, right? So if we can digest that, look, you see how the buyers are starting to show up here on the bid side, 19, 20, right? So I'm trying to understand and learn how to read the tape. So to me, that tells me that there's a lot of support sitting at 189. Now remember, our put contract is way out of the money, right? It's all the way down to 182.50, and because it's so out of the money, like if the stock changes direction, it just eats up all your premium. But all right, we've got Juliana in the house, is about to go to school right now. We want her to give us our good luck for today, so let's do it.
Good luck, traders.
It ruins your hair sometimes, huh? Have a great day. You smell good. What you got on, girl? What you got on, girl? You look beautiful. Have a good day. Love ya. All right, so we went ahead and closed that put, right? So this is closed, and we're gonna leave it on here because we've got till the end of the week. But we're gonna leave it on here as a reminder to us where we did it. But we based our decision based on the level 2 data that's revealing to us that there's a lot of buyers or potential buyers sitting at this 189 level. So that's why I'm going to close this short. And like I said, it was a long shot and we made a couple of bucks on it. But I like the fact that we made a couple of bucks on it because that was the goal. The goal was not to hit the whole thing, but just to catch some of the move. And we've done that already. So again, we have a lot of buyers coming in on the bid side. Big wall here at 189 to 2,100 shares sitting, order of 2,100 shares sitting there at 189. So that's what we're going to place our trade on. So we're going to go ahead and now put Reddit on the board because that one is still selling off, right? And this one, we were looking at this one together as well, and we were noticing how we're starting to see buyers accumulate at these levels because this is where Reddit opened up. So right now we are at the Reddit opened up here, right? It opened, I think on this day it opened at 47 and it went as high as 57, right? So now we are below the IPO price, the opening price of the IPO, which was 47. So right now it makes sense to me that we're starting to see buyers come in at these levels because this is where we're actually below the opening price. But it could also mean that this thing can completely break down and head lower if we can't survive this middle of the range here. So I would call this like a little zone here. Definitely call this a little zone here. All right, so we're out of our Boeing put. We're out of that. All right, I think I'm gonna move myself over here. Oh, there it is. I moved myself over. Just so I'm not on the way there. All right, so same thing, same idea with a Reddit at this levels, right? So we're just, this is the low, right? So we're gonna see if it even gets down there. And then we're gonna come back and visit our BA to see if that actually plays out as we had anticipated here. You still have that 2,100 share sitting at 189. Remember that. And we could always jump back in too. All right, guys, I got to run to the restroom real quick. So follow me on Instagram. Oh, damn, I left the mic on. All right, so so far, our strategy here with Boeing and watching the tape has played out. Yeah, and let's see, RDDT. And the same thing with Reddit here. So Reddit has had a little bit of a bounce here. Oh, I was being dyslexic there. Okay. So same thing with Reddit here, right? So we've been on a short on Reddit, and what we're watching is the tape, right? So we're watching orders accumulate here on the bid side and on the ask side. You know, people are selling shares. They have, you know, and there's really not a lot of buyers, right, at these levels. But with the exception of here, right? So this is 900 shares, 700 shares, 1,000 shares here at 42.17, right? So look at that, 42.17. Somebody's waiting to buy 1,000 shares at 42.17. Yeah, 1,000 shares. So right. So when you're seeing the orders come in, you're seeing here at 45.52, right? So there's people 700 shares, 200 shares, 900 shares. You're seeing buyers come in at these levels, 45 here. So you can see the orders coming in, and then you're seeing on the time and shares here, you're seeing it be digested, right? You're seeing those orders get digested. But look at on the ask side, 18, 45.95, right? Like there's a lot of sellers also. There's a lot of sellers on this side. So you see that imbalance that gives you conviction whether you are long or short on your position. By reading the tape, then you'll develop this conviction that, oh, okay, I know what's happening here. I had to do a bid today. Damn, we're still falling. All right, so look, 3,200 shares, 3,100 shares at 45.76, right? So you're seeing buyers come in at these levels. 3,100 shares at 45.76. You see that? Right? You're also seeing sellers here. Look, 1,900 shares, 1,000 shares being sold. But then, so you start seeing that this level is like a level of activity that's occurring at these levels. So that's the interesting part. I think that's the real interesting part about the whole thing. All right, still continuing to watch. Oh, you guys, don't forget we have a poll going on, okay? Help us out with our poll. Right, so we're here. Here's our buyers, right? 500 shares, 1,000 shares, 200 shares. So here's our sellers, 1,000 shares, 200 shares, right? You start to see a little bit of an imbalance happening here, right? You start seeing more buyers than sellers, or more sellers than buyers, what have you. You start seeing price action kind of move, and then when you start seeing it like kind of like imbalance, then you start seeing that the price is usually holding. But it's hitting a low level, right? 44.24 was the low of the IPO of the short. The IPO has only been around for a couple of weeks, but you can already see that this little battle happening at this level. Oh, AMD gave it all back. Damn, it's almost like a a bearish engulfing candle there. And then Tesla is down $5 already. Wow, did I do a range on that? Oh yeah. Oh man, yeah, Tesla's clapped, guys. Tesla's clapped so far. Target is pulled back as well. Russell, little wicking on the Russell here, and Apple also at that. They broke that psychological level of 170. We're now at 169.92. Yeah, so everything's red. I see everything red right now. But Boeing recovered a bit. That was interesting. That was a good call. That's a good call so far. That's a really good call. Using that new strategy with the tape. Looking at Reddit here, look at these sellers. 46.28. We're not there yet. There's sellers up in the 46 area. 45.69 here. A couple of 300 shares there. So we're getting a little bit of a bounce here, right, at this level. It's almost right at the IPO level, almost where things opened up. Yeah, it's kind of slowed down though a bit, right? Oh, at least we got a check coming in there. That's good. Yeah, a lot of stuff selling off. We're right across the board. Got a little pop and drop today. Tesla still down. It's not going to recover anytime soon. Boeing 169. I'm sorry, Apple 169.91. Breaking that psychological level of 170. That's not good for Apple. Boeing did bounce right off that. Boeing did bounce. That was a good call on Boeing. Are you starting to see buyers come in here on the Reddit? A little bit of buyers coming in here. Sean, good for Sean, man. Kicking ass, brother. Just watching the tape here. A lot of buy. Look at this, 45.95. We're not there yet, but look, you already got 1,800 shares being sold at that level. Orders. Meanwhile, on the bid side, right? Like, look at the imbalance happening, right? Look at the imbalance happening. More sellers than buyers, from what I can tell here. Uh, 169.88 on Apple, guys. Apple's getting real top heavy here. Boeing did recover. Not recovered fully, right? But it's bouncing. Same thing with Reddit here, right? So we're starting to see Reddit get a little bit of a bounce. But look at sellers, 4,200 shares at 46.30. Wow, 4,200 shares there. So even though we're starting to get a little bit of sellers here come in, a little couple of buyers coming in. There's a lot of sellers up in this range too. They're gonna sell. They're selling into that strength. That's how I'm interpreting it. Look at this 4,200 share, 46.30 here. Let's see if this gets bought up. Just keeping an eye on it. And we've got a couple of weeks on it, but it's been selling off pretty aggressively. So it's pretty cool to watch and also to test out your theory, right? To test out the strategy, see if it's really working. Look at all these sellers here. 4,200 shares, 1,000 shares, 500 shares at this $46 price. We're not even there yet. That's why it's pushing lower. All right, guys. I am Shimano Traders. This is The Spread. We are a live trading show. Monday, Wednesdays, and Fridays, usually 6 a.m. to 9 a.m. Pacific time. I am Shimano Trader. Thanks for hanging out with us today. Don't forget, we got a poll going on here at the top of our page. Subscribe to our page as well. Show us your love and support. And we'll be streaming here every morning. But thanks for hanging with us today. We are looking at a new strategy here. We're looking at the tape. Usually don't look at this stuff. But I took a really good deep dive, almost like a Twitter class regarding time and sales and level 2 data and how to use that data. So that's where we're at with it right now. Look at this. So let me draw myself a little bar here. That's where the change in structure happened potentially. Right? So this little level here, right? Because we're starting to see how it's dropping, but now here it created a higher high here. I mean, even though it hasn't closed yet, right? We've got an hour to go, but there's a little bit of a change of structure at this level here. So we're going to just mark that. But I see a lot of 4607, right? People are willing to bid it up. And here you have your ask, right? So these are your people who are selling on the right, and this is people who are bidding. So the buyers are on your left and your sellers are on the right. And this is what you call your level 2 data. and then you have your time and sales. These are actual sales being, these are actual orders being fulfilled, right? And here on your left, on your right, here on the bottom right, you have your these are your limit orders being placed in the tape. So here I would look at this here and look, there's a 1,000 share, somebody's, sorry, I'm getting notifications. So anyway, so yeah, so look at this 12. So right, these are bids, right? So people are bidding this up, right? So here's your buyers, here's your sellers, and you can see kind of the, you know, you multiply this times 100. So right here, this is 1,200 shares at 46.08. Right, somebody's bidding, willing to buy 1,200 shares at 46.08. We're not even, we're not there yet, right? But if we drop down there, does that, look at these orders here. So this is what I'm looking at, and then looking at the tape as well, right? And that allowed me to, I think, get out of Boeing. Let me see. All right, so check out our Boeing trade. So we were in Boeing, we were around here somewhere, and we started seeing all the buyers come in on the tape. And then we closed our short. So we had a short at 182.50. We never really expected to get down there, but we did ride this move all the way down to around this level. We identified buyers, right, on that level here, and then we closed our short, right? It was just a real, I think it was like 25% return on it, but that actually worked out. That actually worked out as we'd hope so far, right? I mean, we have the entire week, but for the trade that it is today, that's what we saw. So now on Reddit, we're kind of using the same strategy here on Reddit. And we're seeing that, look, people are 600 shares, 700 shares at 46.25. So there's buyers coming in here, right? 100 shares, 200 shares. These are people. The top of the thing here is usually what's getting fulfilled. And then you have your wish roll. Look, like this is 46 one, right? Somebody's going to buy 1,100 shares at 46 if it ever gets down there, right? Right now we're at 46.33. So anyway, this has been really cool strategy so far for me this morning, using it and just, you know, just using it, you know, just trying something a little bit more different, trying to focus on the specific stock rather than having like 15 up and going back and forth. So we're starting to see some buyers come in here, right? right. Starting to see the little change in market structure here. We've been going down, lower lows, lower lows. Now we have a higher high here potentially, right? Or we have a change of structure here. So we're going to look at this and pay attention to it and see if it continues higher or if it's going to hit the top of the range and curled over. But looking at the tape right here, we have a lot of, look, 46.44, right? There's a lot, there's a $2,000 order there, 2,000 share order sitting at that price level, 46.44, right? So this means that we get to 46.44 here, that order is going to get executed. Look, 1,100 shares. So we'll see what happens here. We're a couple cents away, 11.44. See if we get a 2,000 share transaction happen here. Here, this is lined up. Right, that's the one we're highlighting. Where'd it go? Oh, there's the 44. Maybe we see 2,000 shares get sold. Crazy. Oh no, here it is right here. Look, this it looks like they're moving up, right? They're moving up their it looks like they're moving up their order to 46. Now it's 46.60 to sell. Right? So anyway, yeah, that's what I've been doing this morning, paying attention to that and studying that, and it's actually, I mean, it takes a little bit of time to kind of get used to it, but I think it can really give you an edge. It really can. So here's your sellers here, right? These are your sellers. Here's your buyers. Look, it's getting pushed back down, right? Because look at this, right? Look at the orders, 1,100 shares. So it got pushed back down. I have yet to see it show up on the tape here. So I do see the orders here, but I haven't seen them up here. Like I haven't been able to match them yet. No, SPY's down. SPY's down almost $1. AMD's coming down after that big pop. Just tricked everybody, sucked up some money. PayPal's dropping. PayPal's down 1.61%, almost a buck there. It looks like Pfizer's kind of getting a little bit more stable. AMD might be just gathering some strength. Let's see AMD up here. Let's see what we can learn on AMD today. Same idea here. Right, looking at buyers and sellers here, looking at our level 2 data, right? So we're seeing here's our sellers, right? And here's our buyers. Just kind of see if you notice an imbalance there, right? So far, this has been very interesting to me. Watching this this data, right? The level 2 data. So we're seeing, let me see, go to the bottom, 180.92. We're at 182. So look at this. These are orders sitting in there. 186, 188 went into for to be sold, right? Look, 187. So I'm gonna add to my AMD position here on this pullback. I have a portfolio that I'm managing here. Bitcoin selling off. Bitcoin 68,664 right now. All right, so we've added here to our AMD position. I don't know what my average is. Maybe I should list my average here. 184.83. That's our average. That's funny. Oh, come on. All right. So we're just watching AMD here, using our strategy here, right? So we're watching our level 2 data, just using our level 2 data, and also watching time and sells. I don't know how much of level 2 data and time and sales that you use, but this weekend I read through a course on options just to refresh my memory, and also I'm considering doing a class for the upcoming boot camp here with Sean. So if we do that boot camp, I will most likely teach options, just basic strategies on options. And anyway, in doing the prep work for that, I learned a little bit about time and sales and level 2 data, and I've been using it today, and it's been working out well. It actually can give you an edge in the market, believe it or not, properly using time and sales and level 2 data. So just a quick recap. So, right, so we have our bid size and our ask size. So bid, these are our people who are buying. Ask is people who are selling, right? I'm asking for this price if you want to buy my shares. And then you have the bid size and the ask size, and I think you multiply that times 100. And that gives you an idea of how many orders are in the queue to be filled. So these orders are just orders in the queue. They haven't been filled. Your time and sales is your actual execution of those orders. I've yet to match them, like find, oh, here's the 300 one at 182.22. I've yet to find one this morning. But what it has helped me on is with trying to find levels of support and levels of resistance in certain areas. So I think when you use this in conjunction with other indicators, it could be a powerful tool. Because right now what I'm seeing on the level here, right? So we're seeing that at 174.69, which we're nowhere near, right? We're at 182 currently, but there is a buyer that's willing to buy 100 shares at 174.69. If it ever gets down there, he'll buy it, right? So you're starting to see the ones in the bottom of the level 2 are ones that are way outside the money. There's no activity, and then the ones towards the top of the queue are the ones actually closest to the money and actually being filled. They're actually being filled. So It gives you an idea, right? Price level right now is 182.17. We're kind of in this range here. You're seeing these orders come in. These are the sellers, these are the buyers. And I think sometimes you can pick up an imbalance, or you can pick up if there's buyers or sellers sitting at a particular level. And these are levels that you have to identify. But if you use that level in conjunction with your level 2, it should give you an edge in regards to seeing if the level of support that you think may be there is probably there, because you'll see a lot of buyers or sellers at that level. So that's the strategy that I'm trying this week. I'm going to be trying the rest of the week and just kind of trade a little bit more, a little bit with that strategy. So we use that strategy here on Boeing, right? So we know that it worked here on Boeing, because when we were wicking down in this level, we saw buyers, right? Like this guy right here at 189.23. He has 2,300 shares, right? So this is at 189, right? Let's do the math. $189 times 2,300 shares, right? This guy has almost $500,000 position, right? This order here for, oh, look how it went away. It goes away too, and then it comes back. See how it came back? This is almost $500,000 order sitting here at 189. So, right, so we dipped at 189 and we bounced. So when we were in that area and we saw this order, we're like, oh shoot, that's a wall, right? That is like a wall, right? Like if you break that, somebody's sitting there with $500,000 order. So as we're approaching that level, what do you think starts to happen? You start to see the support come in for Boeing. So we were in a lotto put, but I think I still think I have it on here. Yeah, see, our strike price was 182.50 for Friday. Right, so anything can happen, and that is and I think when we took the trade, we're like at 192 or something. We're like, wow, this thing's like $12 out of the money, but we still took that trade. I think we made like 25% on it. But I think the important thing in me sharing this with you is the fact that I didn't just take that trade based on hope. I didn't just take that trade based or close that trade based on anything other than what the charts were telling me, what the level 2 was telling me, and what the time and sales was telling me. And by placing that trade, I was able to get out, made 25%. It was real small, like $15 or whatever it was. But the point is that you made 25% in about an hour on your money, knowing exactly what you were doing. And the reason we took that trade is because we kept seeing that 189 buyer sitting there. We're like, oh man, it's going to be hard for us to break through that level. And sure enough, we didn't. It doesn't mean it's not going to happen, and it doesn't mean that I'm right. It means that I was right at that moment. At that moment, I was right. Yes, at that moment I was right, and I was able to close my trade. And if I wouldn't have closed it, then it just would have sucked up that premium, because we'll be sitting here at 189 now when we were back in the lower 189 levels. So it's just helping me. So when I do larger trades or have more size on my trade, that one trade that I placed right here, it made 25% on one contract. But what if I would have had 10 contracts, right? So anyway, it's just building my confidence up, and it's teaching me a strategy, and it really feels like it gives you a little bit of an edge. There's that 189 buyer again. Look, it just disappeared. Other thing that I learned about, here, look, it's back again. The other thing that I learned about level 2, the other thing I learned about level 2 is that sometimes they'll flash a order to make you feel like me, right? I close my position based on this 2,300 shares that are sitting here. But that could just be a ghost order. Can you believe that? Like a ghost order, like somebody, that trade is not real. And the closer it gets to 185, 89, it's going to disappear. That was wild too. That was really wild to hear. How's our Reddit short doing? Oh, look, here's our Reddit short still working for us. So we're in a long-term Reddit short, right? 418 expiration date, $35 strike price. If you look at the Reddit, right? So the opening price on the IPO was 47. This is the opening candle, first day of trading for Reddit when it did the IPO. And what did you see? Wait, am I on here, guys? Oh yeah. Okay, cool. Sorry. Sometimes I don't know. But anyway, like I was saying, so here's your Reddit candle, right? You can see at the top there that this was March 21st. It opened at 47. That was the opening price for Reddit, right? And then it went as high as 57.80, and it closed at 50.49. So that's this one candle here all the way to the far left. And well, this was the range that it stayed on for probably about 2 days, right? And then it broke out. It got as high as 74. And then it's been like falling this resistance line here that I have, it's just been respecting it, right? So here's your break here, right? It's like that. So it's still working. It's still been respecting this downward trend. And when we look at time and sales, right, where current share price is 45.85, and you look at 45.85. So these are being bought up, right? But we had like 45.80, 500 shares at 45.80, right? If it gets down there, right? But look at the sell side, right? 2,200 shares at 4,600. So if it goes up to 46, if it recovers to 46, there's a $2,300 shares. 2,300 shares are going to be sold at that level, right? So that to me means that there's sellers there, right? That level, that 46 level, has a lot of sellers there, right? So that's your wall right there, 46 to the top side. And then you look at the bid, look at the bids, 100 shares, 100 shares, 100 shares, 500 shares, 800 shares, 45.79. So to me, it means that when I look at this, I think that the sell pressure is bigger than the buy pressure so far at this level. So that's how I'm interpreting that data. Hey guys, don't forget, we got a poll at the top of our page here. I just want to know how your first quarter went. If you had a green quarter, red quarter, break-even quarter, just let us know. Yeah, so we're watching that, right? See here, there's the bid size. Here's your sellers, right? You're starting to see more buyers come in here. So that's how I've been reading the tape, or reading the level 2 data. So that's what I've been doing this morning. It's been working out well for me so far. So I actually like it. Man, SPY is going at the bottom is hitting the bottom of the range for the day. So let me show you what I mean by that. So if you go to the option chain every day, it kind of tells you what the expected move is going to be for a particular stock, right? So when you look at the SPY today, it had a 525 to the upside and 521 to the downside. That was don't worry about these green lines right here, but this was today's range. So 521. So we're approaching the bottom of the range for SPY for today's move. And looking at the tape on that, right? So here's your tape, right? Here's all your buyers, and here's all your sellers. Looks like you got a little bit more buyers there. But let me see, 521. Look for 521. Look, we've got buyers at 520.77 and buyers at 521.20. Look at that, 40. That's 4,000 shares at 521. So imagine 40 times 100, right? That's 4,000 shares. 4,000 shares times what is it? 521, right? That's a $2 million order that's sitting at 521.20. Okay, so what does that tell you? To me, it means that there is a level of support like a motherfucker right here, right? 521 and 520. Look at that's a huge. Look at the order's gone. It disappeared. Let's see if it comes back. Right? Look at 521.20. You got 40. You got a $2 million order sitting at 521.20. Don't you think that's a level of support? I would imagine that is a level of support, right? And look at 522, right? 522. You got the same order at 522, right? On the ask size. So yeah, man, I would almost, to me, right, knowing that information, knowing that data, and watching the sell-off happening in the morning, as you know, as you're approaching the bottom of the range here for the day, you almost want to get long, right? I want to get long. Reddit's starting to see a little bit of green here on Reddit. Look at this. And it would make sense for me on Reddit here, right? Only because it is at a level, right, where right, it's inside this little range here where the IPO happened, right? It's at 47 is where the IPO opened. So I'm up 128% on this trade with Reddit ever since we took that short. So we're up 128% on that. But look, you see look at this. Look at this order here. That's 100. That's 10,000 shares at 46.50. Look at this order. Yeah, you see this order here? Look at that. And look, we don't even see anything near that on the bid sides. But look, there's a 46.50. Yeah, that is a major. Look at this order here. Wow, that's crazy. 46.50. See if we get up there. But see, that to me means that there's a wall up there, right? 100 times 100, that's 10,000 shares. 10,000 shares. There's a 10,000 share order right here at 46.50. That's a $465,000 sell order right here. You see this 46.50? We're almost approaching it. Let's see what happens. Let's see if we hit that 46.50. Here's that order here. That's super crazy. Let's see what happens. Let's see if we even get up there. I'm so curious to see what happens. 46.50. We are 6 cents away. Let's see if we hit it, and let's see if we see it on the tape. All right, 46.45. Wow, look at this order here. It's crazy. Look at the sellers. All right, there it is. 46.52. Did it happen? I'm trying to see if I see a $10,000 order up here. 900 shares. So Judith. Oh no, it's still down here. Look, now it's at 46.90. 46.90. That's wild right here. This order here. That's pretty crazy. You think we'll even get up there? 46.90. Here's all your sellers now. Look, 400, 500 shares, 200 shares. You're starting to see all the sellers come in here. But look, it's a nice order here. Yeah, so that's what I've been studying this morning, and that's what I've been focusing on. Honestly, doing a little bit of something different here. I didn't have me particularly myself. I didn't have a great first quarter. It wasn't a terrible quarter. I just didn't. Even though Boeing carried me through the whole first quarter, I still ended up with a loss for the quarter. But it was really minimal. It's like, I don't know, like $100 or something like that. So, it wasn't bad. And I think streaming and trying to get the hang of streaming and trying to stay focused on what we're doing and that kind of thing has also been a little bit of a challenge, but I'm starting to get a better feeling and a better understanding for that. Starting to see a little bit more green, a little bit more recovery across the market and different charts that I'm looking at. Yeah, look at what happened to SPY. We were talking about SPY not too long ago, right? About SPY finding that we had that level of support, and now it's bounced, right? It's now at 521. Right, and when we were watching it here, like here's these orders, 521, 45. Look at these orders. It's almost. Look at this order here, 4,000 shares here. That's that $500,000 order we're talking about. Yeah, look at this major support here, and look at the buyers. Look at on the top side, 522 here on the top side. So you've got buyers and sellers. Look at that. Look at Reddit here. It's starting to test that downward resistance here. It might be time to exit this position here. That 100 look at that 10,000 share order still floating around here. So these are the buyers here. And here's your sellers. Look at this $1,000 share order here. Yeah, so that's what I've been watching this today, and I'm going to be doing the rest of the week. So we're going to be trying to work that strategy out and try to perfect it, get more comfortable with the strategy of the level 2 and the time and sales, and using that strategy to help us trade. So Boeing, once it found this recovery here, let's go see what's happening on time and sales here. Here's a 189. We have a So you're still seeing that this is a big order here. It's a $500,000 order here. This 2,300 shares at 189. So that's still flowing right here, right? So that's like what I would say is like a floor, right? A floor for the stock, at least based on the time and sales that we're watching right now, right? So that's a big order. It's going to be hard to get down through that 189 level, All right, and then you have buyers and sellers happening here. These guys are still buying. These guys are still selling. But it feels like it's reached this like equilibrium, right? This balance on Boeing, at least. I look at Reddit. So Reddit's now catching a bit of a bid here. Right, starting to break that level of support. That level of support's breaking. Even though we have a lot of time on this trade, we're gonna just close it out now. All right, so I'm gonna close that out. 126%, 130% on that trade. Yeah, so we're doing it based on what we're watching here, right? So we're watching a lot of support come in at these levels. We're at the opening range of the IPO. So I would say people that missed, right? They're like, oh, look, it got all the way to 74, right? When it was down here in these levels. So you're starting to see these buyers come in now trying to maybe go up. So maybe the long is the way to go now on Reddit. All the hype. But when you're looking at all the bids here, you're starting to see more buyers come in. See more buyers and less on the sellers here. So that's what I'm seeing right now. Let's look at Reddit contracts for the week. April 5th, we're at 46.79. Range is 56. Oh, they're super expensive, man. They're super expensive right now. Yeah, it's super expensive for the week on Reddit. What was I had it. All right, I already closed this, so I don't know if we're ever gonna get down there, but I'm gonna leave it on here just for entertainment purposes. But it was 418, right? 418. Oh no, it had to be 419. There's no 18. It's gonna be 419. That was the end of the week. 510. 419, right? Yeah, 419. Okay. All right. So that is closed, and now we are going to see 39. Look at that, 39. There's some support there. 39. I don't know if this thing is gonna continue lower, but I doubt it. See the fibs on this? Wow, the calls for Reddit for $56 is $2.40. It's $240 if you think that this stock is gonna hit $56 by April 19th. That's wild. Does that mean it's super bullish? Rather buy the shares. Wow, super interesting. All right, so we're out of that. We'll see how that plays out. Let's go to our SPY. Here's our SPY now. So we've seen SPY come down to this level, right? We're seeing the tape, and we're watching level 2, and we're seeing all the support come in at 521, which is actually the bottom of the range. So if anything, man, things would look bullish at this levels, right? This is an hour chart. Let's do the 30 minutes, see what that looks like. That's your 30-minute chart there. So 521, a lot of support at that's 521 level. We've caught the 200-day moving average here on the 30-minute chart. It's 522, 522.40. So you might have a range of 521.60 to maybe 522.40, probably about $1 move before we have to exit. Let's see SPY. Zero DTEs, man, they're so damn tempting, but it's just been burned so much on that. It's not even fun anymore. All right, just watching the tape here, watching level 2. See how I look on OBS here. Oh, okay, not too bad. Starbucks, a reminder to get your Starbucks. All right, BS. All right, 522, maybe stay at 522. Interesting, no. Here we're pushing lower here. Watching the orders come in here. Look at this. 522. Wouldn't be mad at 522 calls today. Yeah, man. As much as I want to do zero DTEs, I'm not gonna do it. It's just it never works out. It almost never works out. All right, let me see. Looking across the way here, Apple is retesting at 170 key level. It's actually come back up to it. I want to see how it acts at that level. I actually want to put it on the chart here and watch it together. Yeah, let's put Apple on the chart here and see how it does. Look, SPY's continuing to sell off here. Bid. All right, so here's some buyers coming in here. But then to get all digested here. All right, traders. It's continuing to watch SPY here. Oh, it's going to do AMD, right? No, was it AMD? Yeah, AMD we're going to look at. All right, so we are in AMD. We have shares on AMD. Our average is 184, so we have a little bit of a drawdown on that. And we just want to look at the levels here, right? So these are your buyers here. No walls to look at, like no major here. I'm just trying to see people 182, 182.07, 180. All right. Yeah, man, this is the part that I'm learning, right? I'm just trying to understand what level 2 is trying to tell me. What is level 2 trying to tell me here? All right, what is level 2 trying to tell me? Just looking at level 2. Something like that. There you go. Gives more room on the here. Okay, so we see this here. We buyers, sellers. 500 shares here on 187. Oh, these are way up there though. So look at this 182. I saw that 2,000 shares there at 182. Again, I've yet to find it on the tape, right? I don't see them on the tape. I see the orders here, but I don't see them on the tape. Like these are the limit orders that have not been filled, and these are the orders actually being filled up there. So I don't know how I don't know how that works yet. All right, so I'm looking at the tape here. I'm trying to see a big orders. These are your bids. These are your buyers. These are your sellers, right? So people are asking for 192. All right, these are way outside the money here. Looking at the top here, just pretty balanced, right? It's pretty balanced. Maybe a couple of more buyers than sellers, but it's pretty balanced. So when you see this little balancing action here, you don't see like a big difference. Price tends to consolidate. That's what I've been learning too. PayPal's dropping. Apple's testing that 170 key level. We're gonna go and look at it on the big chart. Boeing looks like it's recovered. Reddit as well. So all right, Sean. Good day. Yeah, it's been a little choppy day, guys. Look, AMD starting to make its way up here a little bit. All right, we're going to look at Apple, right? AAPL. All right, let's look at Apple. Let's look at a hourly chart on Apple. All right, so here's our Apple. This broke. Look at that. This is perfect. Once it broke, man, it just fell off. Okay, so we're looking at Apple right now. Looking at the level 2, 169.60. I see a floor there, 169.60. Right? So a little bit of support there. Just looking at the tape, guys. That's all I'm looking at right now. I'm looking at the level 2. I'm sorry, level 2 data right here. So look, buyers 15, 169.98. Right, you see a little bit more buyers than you do sellers. So it's just that's why it's kind of why it's holding. Right, what is that 170 level? Is it gonna hold? We have no big orders here. I don't see any big orders. All right, traders, just looking at the level 2 data here. We got some buyers here coming in at this level here. But I mean, look at the chart, man. This chart looks clapped to me, right? Like we want A+ setups only here, right? So here's the breakdown happening on Apple. You're starting to kind of maybe consolidate at these levels here. Oh, let's do the range for the week. How about we do that? No. What am I doing here? I'm doing the 1 hour, right? And we're going to do the range for the week. All right, let's do the range for the week on it. Screw it. We got some time. Okay, so we're going to activate this. Just move it over here closer. Activate this and move it over here. Here's the start of the week here. Start of the week here. Oh, no. Activate this. And start of the week. Here we go. All right, cool. So let's do these. Let's do these here. All right, let me get my book out because I write these down at night. All right, so Apple had a $3.92 expected move. All right, so let's do the math on that. Let me see. It closed at 171.48, 171.48, and it has a move of 3.92. So 175.40 to the top side, 175.40 to the top side for Apple, and on the downside, we are going to do, what's my calculator? Apple was 171.48. Next time we're going to minus the 392. Gives us 167.56. 167.56 to the downside. All right, that is our range for Apple this week. So I'll put it on the hourly now. Now we're starting to see this. Yeah, that's where we're at. So when we look at, all right, Sean's got some data there for us to share. So maybe it puts what's the play this week, huh? How you see how it makes you second guess yourself? Hey man, you guys listen to podcasts? Oh, SPY dumping. Oh man, look at SPY dumping a bit here. Red is recovering. We're gonna put that on the chart right now. Look, more buyers coming in than sellers. Right on Apple here. Yeah, be careful though. All right, here's your SPY. Your SPY is dumping here, approaching that 520. Remember, we've got this 4,040. 40. It's 40 times 100. You have a 4,000 share order here sitting at 521. That 521, 520 level. That's probably going to be your bottom. That's probably going to be your bounce. And then you have, look at the same orders on the 520, 522 side. So that 521 to 522 order based on level 2, you can see the gap, right? You can see that there is there's a ceiling and a floor here based on the orders that are in there. These are way outside the money, right? because we're right now we're 521. This is 521.90, 522, 522.41. It's where you have your big orders. And then when you look at your time and sales on the orders that are actually being filled up here, you literally have more sellers than buyers, at least based on that last print. But yeah, what's up, traders? Where you guys from? Where you guys joining me from today? If anybody here in the chat want to drop by and just let me know what city, country you may be in. I always like to know where people are watching me from. So far, we've had Florida, we've had Nashville, we've had Texas, we've had Boston. I don't think anybody in Cali though. Nobody out here on the West Coast. What's up? What's up with all my West Coast peeps? I got to get up early for y'all. All right, watching here. So you guys are seeing this right here. These orders at the bottom of the level 2, right? Those are pretty big orders in there. And then we're watching the time and sales. If you're at the top of the time and sales here, or the level 2, sorry, level 2. This is time and sales. This is level 2. You can see how the orders are being placed, right? Like they're pretty balanced. A lot of asks, a lot of selling there. But this 521, man, you've got a really good floor at that level. Yeah, I'm not in any option trades right now. I'm just in my shares. I gotta go walking a little bit. Ugh, we're getting clapped on our shares. AMD's pulling back. PayPal's down almost 2%. Target's starting to pull back a bit. Interesting. Russell's down. Russell's down almost 1%. What was I gonna look at? What was I looking at over here? Target, TGT. So here's Target. All right, looking at Target. Did we do our range here? Oh no, we haven't. So let's do this one, because I did do Target this week also. Target. Ooh, what's our target for Target? So on Target we have $3.79, a $3.75 anticipated move for the week. So when we look at Target, we had 172.21 plus 3.79, and we get 176 even. So you have 176 to the top, to the upside. Is that right? Yeah, 176. I think we already hit that already. And then add it. Oh, that might be wrong, guys. Let me see. I had a Target. I had at 177.21. That's what it was. I had it wrong. So it's 177.21 plus 3.79. It's 181 to the top side. I think I already hit that. All right, so that's our range for the weeks. Look, it already hit it. That's interesting. Might be a good put. And then we're gonna do one. Give my calculator again. Give me my calculator. 0.21. And we're gonna minus 3.79 on that, and we're gonna get 173.42. Okay, that is our downside range for Target this week, and we already hit the top of the range. So that's super interesting to me, right? That's super interesting to me that we already hit the top of the range. I don't know what's up with all this here. Oh, just old history stuff we have in here. All right, so yeah, so this is a super interesting one here. Look at on the ask sides, we have 181.18 for sale. We have 1,800 shares order sitting up there, and this might be a good short to go for the downside here. Let's check it out. Let's check out the option chain on Target this week. It's had quite a run. But if we do TGT, all right, let's look at the option change for Target. We're sitting at 178. We already hit the top of the range for the week. If we were to do 173 for Friday puts, they're 16 cents. So 16 cents for 173 puts on Target. We got buyers at 181.18 here. No sellers. So we got a nice 1,800 share order sitting up there. Yeah, let's do it. Let's do the 172.50. We're gonna get, what that cost, 48. Okay, we're gonna get 3 contracts. All right, so not a recommendation, not financial advice. You will lose money. We're gonna take the 173. What did we say we take? We didn't even know what we took. What the hell? 172.50. 172.50 strike price, right, on target. So we're gonna take those puts. We got 3 contracts. They were 16 cents each, $16 each contract. But we're gonna do it based on that we already hit the top of this range. Oh, I like this song. All right, so let's see how that goes for us. 72.50. It is 4, 5. It's quite a move for it to get down there. Well, like I said, we don't need the whole move though. We don't need the entire move. We just need some of it. We have enough time to wait it out. I'm showing the left here. All right, great. So there it is. That is our puts for Friday. All right, so that is what we're going to be playing. Look at the ask. We have 181.18. We have a lot of big sells up there, 400 shares. So we have a big seller sitting at 181.18. If we can get back up there today. So that's the only thing I see on the time and sells that that is probably bearish. But we're gonna see. I think this was maybe the blow off top on it. We'll see how it goes. I already hit the top of the range here, and we're gonna see how it plays out. So we're gonna give it some time. I'll give it some time to play out. Pfizer selling off pretty big too. All right, PayPal's still selling off too. All right, we'll see if our target play works out for us. Right now, we're down a buck on it, 2% already, if you can believe that. All right, that's closed. Close that out. All right, see how's our target doing. All right, looking at level 2 here, pretty balanced for the most part, right? Probably just gonna consolidate here for a little bit. We'll see if that happens. How's Reddit? Reddit's still under that line. Oh, I don't have the move for AMD for the week. Oh wow, that's not bueno. We're gonna do the same thing with AMD today. Same thing we did over here. Just gonna see what the anticipated move is for AMD, and we're gonna get that in there. Oh come on, don't be that way. All right, let's see what the move was for AMD this week. $826, guys. $826. Wow, that's quite a move for a week. All right, we do have data this week, right? That's another thing I didn't look at. All right, AMD 826. We're at 180.49 to start, and then we're gonna do $8.26 move. Wow, 188.75 to the upside. And then to the downside, we're going to have let me see here. AMD, wait, 26. What's my calculator? What's my calculator? 172.23 to the downside. 172.23 to the downside. All right, that's your range for the week on good old AMD, guys. Watching the tape here. Ask some sellers here, right? Looks like a little bit of sellers. All right, we're going a little green on target. That's good. Oh, a little bit more red on target. Now it's starting to break that 5 EMA line there. All right, traders. So far, that target play is green now. So again, we have 3 contracts at 172.50 for the end of the week. We're a bit away, but so far everything we've already hit the top of the range for the week on target. So we're trying to see if we can. That's the blow off top here at 181. See if we can work our way down towards the bottom of the range, which is 173.42. If you're curious about that strategy, it's not even a strategy. It's just something to help you trade. It's on my TradeCaster video library, where you can go in and see how I do the expected range for the week based on the option chain data. So option chain is going to give you data based on contracts that are being purchased on what the expected move is going to be. Take this with a grain of salt, because usually it's not how you think it's going to work out. But like I've been learning here streaming with you guys is it's not just one thing. You just can't have one indicator tell you, oh, okay, this is what's gonna it did this, so it must do that. So you have to kind of use it in combination with maybe 2 or 3 other I would say indicators, or 2 or 3 other things that you see that line up that make you feel like you should get into that trade. But just because you see one thing doesn't mean that it's going to work out, right? All right, so just continuing to watch the level 2 here. Obviously on I don't know how many shares. What is this? 800,000. Look, so on open, target had the first hour, it had less than 500,000 shares traded. So there's not a lot of action, and actually you can see it here on the level 2 that usually a level 2 gets all the way filled to the bottom, but not in this case. So here we have 1,800 shares at 181.18. This guy's been here for a while. This order's been sitting on here for a while, so that's a big order, and it goes away and it comes back. You see that on the level 2. So this is my new setup now. I want to try to concentrate on one single equity or one single trade, and then have my time and shares in my level 2 showing on the screen to help me trade. Yeah, we're down $1 on this target trade now. Reddit continues lower. SPY. All right, so SPY. So let's check out SPY here. So SPY is now sitting at that 121 level here. It's reached the bottom of the range for the day. 521.07 was our bottom of the range. 520. We have, look at these shares here. Look at the buyers coming in here. The buyers coming in at this level. So I almost feel like taking a 0 DTE. Not financial advice. You will lose money because 0 DTEs are horrible. They really are. But just to stick around with the 0 DTEs today on 521. Let me see. 521. The 521 call is $94. The 522 call is $47. The 523 call is $20, but you would have to have quite a bounce to get up there. Here's your sellers. Here's your buyers. Right, so you can place a trade based on this range here. Like we're at the bottom of the range. Doesn't mean it's gonna respect it. Oh, look, it's funny right here. I thought I had a bear flag. Look, and it just invalidated, and that's been the whole move. Oh, you can stay short, right? We can continue to go short on it too. Okay, this is an old 0 DTE. Let me remove this so it doesn't throw you guys off. But again, look at the buyers coming in, right? Look at these buyers coming in. Interesting. Super interesting. New low a day on SPY per Mr. Sean Deckmar. Let us know. Lift looks okay here. Apple 169.67. It couldn't hold. Russell's still going down. Russell's down almost 1%. AMD starting to recover a little bit too. Looks like Pfizer's is getting clapped. Oh, I'm still in Pfizer. Maybe average down on that. Tesla's been our big loser today. We've gotten lighter on that. We've got heavier on AMD and lighter on Tesla. There's Target's still falling, huh? Lift, a little bit of recovery there. SPY new low of day. Here's your SPY here. Look at the order here sitting at 521. Exactly at 521. Look at this order. You can see like you almost get a pop. You get a bounce from that. I doubt we'll get that bounce. But we've got some good support here at 520. It's a big order sitting there. Might get that bounce. And look at this. And you've got, so we're below previous day low, right? Previous day high, pre-market low, and pre-market high. There, we've broken all those levels here on the SPY. So we're trending down. What's up with this? I don't have my range for SPY for the week. That's gonna be horrible. I gotta do that. Look at that range though. Look at this over here. Still down $1 on Target. All right, I'm gonna do the range for the week on SPY. I can't believe I haven't done that yet. Actually. Okay, so where's my book here on SPY? We had SPY was $6 move, 631 move, 523.07, 523.07 plus 6.31, 529.38 to the upside. What'd I say? Jesus, that memory sucks. 529.38 to the upside there. That's your top of the range. 521.21, and then the bottom of the range is going to be, so my calculator again, we had 523.07. We're gonna minus 6.31, so 516.76 to the downside. 516.76 to the downside, we're 521.21 right now. All right, that is your range for the week on SPY. Let's get into the hourly here. Oh wow, there it is, man. We're kissing it. 521.07. We're right at the bottom of the range for the day. For the day. Got that support at 520.80, 520.45. We've got about 5,000 shares sitting there. There's a buyer there sitting there, and there's sellers at 521.40. Look at this big. This is a big one right here. You might push this lower. All right, 9 o'clock, guys. 9 o'clock on the West Coast. I am Shimano Traders. This is The Spread. We are a live trading show here on Tradecaster. Please make sure you subscribe to our channel. Check out our poll at the top of the page. I want to see how you guys did for the quarter. Did you go green? Did you go even? Did you go red? Please let us know. And yeah, subscribe to our channel, man. Just to tap in. Trying to stream a little bit more regularly from this point, but we'll see how it goes. Thanks for joining us today. All right, I'm going to take 523 calls here on... all right, I'm going to take 523 calls. I'm going to try to see if we can get this bounce here. So not financial advice, not a recommendation. You will lose money. Trade carefully out here, traders. There's no point in taking a trade if you don't know what the hell you're doing. All right, so 523 is where we're going to put it at. Yeah, 523. That is our target for today. 0 DTEs. Couldn't freaking resist it, huh? Let's see if we get this bounce here. All right, that's our zero DTE play for today. We're gonna see if we can get a bounce up to that 523 level. Target's working out for us too. Target is starting to fall more. All right, your target. See if we can get below that 5-day EMA line. We're already up $2 on it. So we have 3 contracts. Remember, we're trying to get to 172.50 by the end of the week. See if that plays out. We got sellers here, 180, 118. That's the one's been there for a while. 178.84, 200 shares. Yeah, okay, that's good because this doesn't have a lot of volume. At least usually it doesn't. All right, let's see if SPY holds. Did it bounce? Oh yes, we got a little bounce. Nice. All right, so up $1.50 on that trade. So we remember we have these guys sitting here, 4,000, 5,000 shares sitting here at 521 and 520.48. We got a lot of support there. That's why we placed this trade. So far watching level 2 and the tape has been profitable this morning. Nice bounce here. Starting to get that bounce on SPY. All right, Lyft is looking good too. All right, so remember, this is the purple lines are the range for today. That's the daily range. Green lines are weekly range. And then this green here dash line is our target price for today. See if we can get up there today. Y'all let me know in the chat if you guys, anybody took that trade with me. Let me know. All right, so we are still in that. Our target is working out pretty good so far too. Shoot, where's target? Target TG. TGT. Whoa. All right, target starting to break down a little bit here. Looking good here. How are we looking on the tape? Got some buyers here, mostly sellers here. Not just kind of balance, maybe more consolidation here. Ooh, I like that so much. So far, I've liked that strategy so much so far. All right, here's SPY. You got that bounce just like we expected to get that bounce at that level, right? We had buyers sitting right here. They're still there. 521.80. So we've got some sellers sitting at that 521.80. We have 30 cents away from these right here. There's some big sellers here. Big orders. Nice bounce there. See if these orders, look at these buyers coming in here. Oh, these are the sellers. I'm sorry. Sellers are on the right, buyers on the left. So a lot of sellers here. Nice bounce on SPY. AMD's looking good too. Really nice bounce here on SPY. Look, this 522, look, it's now moved up to 522. You see this order here? It was at 521.80. Now it's 522. All right, so far our target, short, and our SPY calls are working. Starting to see a little bit more of a breakdown here on target. We have 3 contracts here. It might be lovely if this thing flushed. See a lot of sellers here. See the higher numbers. Not as many buyers. Yo, man, that's a good strategy. I'm learning. Good. Still have those. Look, 521.20 now. 520.20. These guys have moved up their orders. All right, traders, I have to leave to my daily walk with my wife. So I am going to stay and leave my charts up here and leave the music playing in the background. And I will come back probably around 10:30 or something like that. But I will leave my stream up, and I will see if I have CNBC playing in the background as well. And I will be off camera. But I want you guys to maybe hang around and just keep listening to the chart. Tune in. You have any questions to put in the chat. I'll make sure to get back to those on the way back. So far, we've closed out our Reddit. So far, it's broken that downward resistance here. It might have been a good move. Calls were super expensive later in the month, so there might be something to the Reddit bounce. And SPY so far is working out for us, and then our target put seems to be working well as well. So I like that bounce on SPY. Everybody seems to be very bearish, including Sean this week. So we'll see how it goes. So far, it's our target is up 34% already. I'm sorry, 10%. And our SPY trade is up 34% because it only cost us $16. So, and looking at the level 2 here, ask, right? We have some buyers coming in here on, no, buyers are on the left, sellers are on the right. So we have a little bit more selling action happening than buying action here. So that's going to remain bearish. Hey, so far this strategy has been a good one, man. I like it. I like it. And in combination with other things that I've got on the charts, so far it's looking pretty good here. Good support at 521, 520.89, 521.20 for this. You're seeing this order move up a bit. But anyway, guys, yeah, so hang around. Don't forget to subscribe to our channel. We're trying to stream Monday, Wednesdays, and Fridays for sure, unless something else is going on. But we're trying to also stream on Tuesdays and Thursdays. So thanks for joining us today. Tap in, put something in the comments, subscribe to our channel. Let's go, baby.
that continue?
You know what I think it does, and there's a couple of reasons. Number one, I think that, again, we've talked about this a lot on the show. The supply-demand dynamic is just a reality, right? There's exorbitant amount of demand, and supply is not really what it is. And we know, that cuts are going to remain in place until at least June, right? So I think, going into our, obviously here in the States, our driving season and where a lot of the spending happens. So I think they have a nice floor for continued growth. I mean, we own the XLE. We got rid of, we got out of Chevron, and I think that was an execution story for us. It just didn't make sense anymore. But I think broadly spaced, and again, crude is up 15% in the quarter, and I think that continues to play through the stocks.
Jimmy, energy for somebody who's got Cheniere, Transocean, and Exxon, big positions too.
Yeah, big positions, and I think the next leg comes from natural gas. Now, this is controversial. I cannot prove this, folks. Natural gas has been absolutely clobbered, down roughly 50% over 5-6 months. Bottoming at 153, now it's at 183. I think you're starting to get some, I'm going to use the term again, green shoots out of China, that maybe President Xi is going to do some real stimulus there. I think that's why natural gas is up about 4.3%. But if you get some real life from natural gas, that's the next leg higher in all of these equities.
What about healthcare, up 8.5% in Q1? Citi today, Steph, downgrades it to underweight. That's part of the sector call that I mentioned earlier, as they downgraded tech as a sector, and then within that, certain calls breaking down the segments. What do we think?
Other than some biotech and Eli Lilly, the group acts terribly. I mean, it really does. So I'm not sure you want to downgrade it here because it's lagged so much, especially since earnings actually for the sector grew 8%. Better than tech, by the way. So I do think you can find your spots within healthcare. I am underweight. I do like GE Healthcare a lot. It's a special situation story, as it's a spin out from GE, the parent we know. And actually, I think they're doing a better job in execution and in margins and market share. I own J&J just because it's so darn cheap, but that stock can't get out of its way. And then most recently, I sold Bristol Myers because I made, 6% and I'm calling it a day because it just doesn't act as well right now.
Are you off sides in healthcare, Jimmy? You're overweight the space.
Yeah, I mean, Steph, you caught me by surprise on that. I am overweight. I think this is the snapback trade after 2023, but I think where you and I are having a little difference is something key that you said. You got to pick your spots. Bristol Myers has just been a disaster. I'm glad you made money, but it's been a disaster for a long time. You and I have spoken about that. If you look at things like AbbVie and Vertex, I mean, they're having some gangbuster years. And then the stock that you and I love, Jason, CVS, I mean, it's showing some signs of life here. I think this is where you're supposed to rotate into, but not get out of.
But it's interesting to me that you're as bullish as most of the bulls. Yep. And yet you're overweight what would be considered a defensive area of the market.
I think
so. Explain that to me.
If I were in your seat, what I would say is, Jimmy, you're going into an election season. Healthcare stocks normally underperform terribly during an election season.
That's yet another reason why I'm curious as to why you're overweight.
So, I mean, that could be my Achilles heel in this trade. As I said, this is a little bit of a snapback after a terrible 2023. Valuations, dividends are very forgiving. The demographic support, but on this election season thing, I mean, we have to point out that the Inflation Reduction Act from 2 years ago actually let the horse out of the barn as far as drug price negotiations go. And with all of the drama that's coming out of Washington, D.C., you're really not hearing a lot on drug pricing, folks. You're really not hearing a lot on that.
The campaigns haven't really even started.
It's a fair point. It's a fair point.
It's a little early.
I find it very interesting that these executives in healthcare, they're making acquisitions. They're doing all kinds of M&A. $400 billion in the last year alone. When a sector underperforms and you see companies doing M&A, that's kind of interesting to me because they obviously see value. They have a longer time period than some of us on the desk in terms of being portfolio managers, but I do think it's sort of an interesting data point and something worth just to keep in the back of your mind when you're looking at the sector.
All right, let's go last debate of sort of sectors or areas of the market that you want to be in before we take our first break. That is small caps versus large caps. We've done some sectors. Now let's do a bigger area of, I think, controversy, right? Because you've had some come out and say, hey, this is the time for small caps, right? Tom Lee is expecting 50% for small caps this year. Barclays weighs in today. We think the small cap upturn is tied to rate cut expectations instead of fundamentals and continue to prefer large caps. Jimmy.
If I'm long small caps, I believe that's a place to be. Let's be clear, this is not a defensive sector. And if I'm in this because of rate cuts, that's the wrong reason to be in there. I mean, it may help as long as the economy is doing well, and that's the main point. The economy has to continue to do well for small caps to work. If that happens, these are undervalued.
No, but you need rate cuts, though, don't you?
I don't think you need
Hasn't
them.
the market sort of proven that?
It would be nice. Look, if you're Tom Lee and you're going to have 50% from small caps this year, and I'm not making fun of him, he may well be right. You'd need 2 to 3 rate cuts. But if you get a strong economy, consumption hangs in there, margins, which Steph was talking about earlier, continue to improve. This could be a nice 20% year. I do think, by the way, you'll get two or three rate cuts this year.
But you don't think it's too soon? Does anybody think it's too soon, Jason?
So I think
for the Russell,
I think it is important to have some rate cuts, to support small cap growth going forward. I think, to Jimmy's point, I think the cyclicals and obviously the economy remains strong. Small caps can work, but I do think that extra leg, the catalyst, because we've seen a little bit of the performance at the end of last year, and then it kind of sputtered out, right, coming into this year. So I think cuts are going to be important there.
All right, we'll take a quick break. We'll come back. Calls of the day. We'll trade some individual names next. We have bullish analyst notes on Delta and Target and Disney. We'll find out how the desk is playing all those right after this quick break.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
Calls of the daytime. We start with Delta, reiterated a top pick at Morgan Stanley. 75% upside is where they see that stock going, $85. Jimmy, the bull case valuation goes up $110. So they reiterate overweight. They're talking about their push into premium will not just allow them to outperform the rising tide of airlines' demand growth, but also will be rewarded by investors.
I'm very bullish on Delta. Trades at around 6.5 times this year's earnings. I think there's a lot of upside to earnings if you just listen to what Ed Bastian says about demand. This is a fun note to read. I mean, the bull case is getting a lot of things going right, including a 12 times multiple that, yes, you folks, you could see a 12 times multiple in some sort of blow-off top. That's not what a rational airline investor is going to look for as their base case, nor is Morgan Stanley saying it's their base case. It's their bull case. The interesting story that they have here is that maybe this is a premium brand, they're saying, like an Abercrombie & Fitch. And certainly there's upselling a lot of seats. I think at the end of the day, though, let's keep this simple. This is another execution story. For 2.5 years, the company has been outperforming on earnings. They just need to continue to execute. I don't think we need to get caught up in the froth of a 12 times multiple or Abercrombie & Fitch comparisons.
All right, so Target's been on the mend, right? From a stock standpoint, the price target today, Steph, goes to 205, from 195 to 205. That's at Jefferies. That's a 52-week high. They met with IR executives, did Jefferies last week, and they came away bullish.
Really encouraging note, talking about discretionary spending actually picking up, food and beverage being now a $20 billion business and up $8 billion since 2019. So they've got a good mix. And then the really exciting piece of the story is the private label that always has been the case. It's about 33% of their total revenues. They have 11 brands that are over $1 billion each. So they're positioned pretty well. Profitability is good. They just got to get the top line back. And I thought the discretionary comments were in the right direction.
Yeah, I mean, the stock couldn't get out of its own way for a while, right? It was painful.
Yes,
but now it's up 26.5% year to date.
But it trades at 18 times, so I think I'm pretty comfortable. And I do think they could see something like 10 to 10.50 in earnings power over the next coming year. So that makes the stock pretty attractive.
Talk Disney. We obviously have the proxy fight and the shareholder vote coming down to the wire. That's on Wednesday. So the price target gets raised, Jimmy, to 145 from 130 B of A. They reiterate a buy. I'm wondering how you're gaming this all out.
Well, let's start with...
As a shareholder.
Yeah. You know, this has been a turnaround story for now many years. What if it now becomes, I'm sorry to use this for the third time, an execution story? And what I mean by that, trading 24 times next 12 months earnings. That's not cheap, but it's not too expensive if you get the growth rate that supports the PEG ratio of 1.2. Now, for this to happen, three things. Theme parks, I kind of take it for granted. We can't have any hiccups in theme parks. Number two, profitability in streaming has to continue to come in before September 30th, and then we talk about how profitable. And third, finally, the sort of strategic moves. What are we doing with ESPN? Let's get the Hulu transaction done. That would be a nice little shot in the arm for this stock moving higher. So those three things.
Do you have a take? I know you've said that you're in favor of Peltz.
I am.
Right? So what happens if he wins? What happens if he doesn't?
Yeah.
As a shareholder, give me both sides.
Well, the support is kind of like it can't hurt. I mean, he's got a lot of experience in consumer. I don't think he'll distract Bob Iger and the team from what they're doing. If he doesn't get the seat, I think both he and I will be happy with the fact that the stock's up 50% in 6 months with a seemingly good runway for more gains.
You keep holding the stock regardless of the outcome?
I do. I mean, I think Peltz doesn't hurt and on the margins can add. I think Bob Iger and team have been doing a good job, and for the three reasons that I listed before, I think the stock can continue to perform. It's not. I think the Peltz sideshow behind us, and it will be a sideshow when it's done. That'll be good.
Why is Hulu taking so darn long?
It should be just a process right now of the investment bankers getting together and having you got two independent investment banks that make a valuation. I think they meet in the middle. It's a process. I don't know, why it's taking so long, Steph, but I don't think there's any hair there.
You supported Peltz too.
Yeah.
Before you sold the shares.
And I would sell the stock if he doesn't get a force.
You would?
Yeah, I would. I think he could make a lot of change. He has a proven track record. He's excellent. You want him on your team. I just don't think it makes sense not to. So I would sell it if he doesn't get more involved.
Wow, okay. Well, you don't own it now. So
I don't.
This doesn't matter.
I sold it a lot higher.
Pippa Stevens has the headlines for us. Hey, Pippa.
Scott, convicted killer Alec Murdaugh was sentenced to 40 years in federal prison today for stealing from his clients and law firm. He was also convicted of related crimes in state court. The judge also ordered Murdaugh to pay more than $8 million in restitution to his victims. He's already serving life without parole for the murder of his wife and son. Google plans to destroy data on the web browsing histories of millions of users to settle its lawsuit related to the incognito privacy settings. The 2020 class action lawsuit accused Google of misleading users of how it tracked people when they were in that mode. In addition to destroying the data, Google will also update its disclosures about the information it collects. And Russian President Vladimir Putin signed a decree for spring military conscription, which will call up 150,000 citizens for mandatory military service. That's according to a document on the Kremlin's website. And it comes after Putin called up 130,000 in September and raised the maximum age for military service to 30. Scott, back to you.
All right, Pippa, appreciate that. Thank you, Pippa Stevens. Still ahead, betting on bonds in Q2, where you can find the biggest opportunities right now. Bob Pisani is going to break that down in today's ETF Edge. He'll do that next.
Changemakers.
We're back on the half. Let's get to Bob Pisani now with today's ETF Edge. Hey, Bob.
Hello, Scotty. Investors are in love with their 4 to 5% return on bonds, but is that going to keep continuing into 2024? I spoke with Joanna Gallagher. She's the co-founder of Bond Blocks. They're 100% focused on fixed income ETFs. That's what they do. Joanna, the big question everybody wants answered, are these 4 to 5% Treasury yields that everybody's fallen in love with going to continue into 2024?
Yes, so we believe in 2024 that income and fixed income is going to persist, and investors can enjoy using U.S. Treasury ETFs for their cash management. And also, we think 2024 is very different because it's a year where you should be putting on some more risk, given where we think the Fed's going to end up at the end of the year. Now,
so last year we had you on short-term treasuries were all the rage. This year you say go out into the intermediate term, the 3 to 7 year for treasuries. Why are we now in the intermediate part of the curve?
Yeah, we are in the intermediate part of the curve because we feel that we're at peak rates. We think that the Fed is going to bring rates down towards the end of next year. So what that means is there's going to be a tailwind of total return coming to bonds. So when interest rates go down, their prices go up. And this is how you can manage duration really precisely. So if you step out of 1 and 2 year duration and in maturities, you're going to get more risk in your portfolio in the Treasury space. So we like intermediate Treasuries for that reason.
And in corporate bonds, amazing. Most of them LQD, big ETFs, still yielding north of 4%. Broad corporate bond, but you like the riskier end, at BBB rated. That's the lowest investment grade out there. You like that. And You also like, of course, what's going on in high yield. Now, what do you like here?
Our top picks in credit this year are triple B intermediate and triple C in high yield. And here's why we like triple B so much. It's because it is the best kept secret in investment grade. Like you just mentioned, a 4.5 yield in LQD. The space in triple B is yielding north of that. And it yields north of that because it is the lowest rung of credit rating in investment grade, but it has almost zero incremental default risk. So it's the place that you should be in. We think it's sort of the place to be is in triple B.
So you get more yield for very little default risk.
Little to none, because the whole category investment grade is something of like 0.2%. It's pretty low, and if you can pick up more yield and more return there, especially if you take that intermediate space and you get a little more duration this year, that's why we like it so much.
All right, we're going to have a lot more coming up on where you should be in bond ETFs this year. Coming up, ETF Edge, 1:10 p.m. Eastern Time. Joanna is going to be joined by Tony Rockley. He's the global head of ETFs at Morgan Stanley. They're very involved in this space. They just recently launched 2 active fixed income mutual funds. That's ETF Edge.cnbc.com. Scotty, back to you.
All right, Bob. Thanks. See you soon. Up next, 2 big breakups. Industrial giants GE and 3M completing spin-offs this week. Stephanie owns them both. We'll trade them both next. We're back. 2 big industrial giants completing spin-offs this week. GE is first. The company will complete its breakup tomorrow. We know you own it. So GE Aerospace is going to retain the ticker GE.
And
Larry Culp's going to ring the opening bell. It's going to be a big milestone in this company's history and maybe in this stock's progression from when you first bought it.
It's been 5 years in the making, so it's been a very long
Somewhat painful, rocky, but more recently rewarding.
humbling, and then yes, now rewarding. Certainly, it's had a great year. It's up 85% in the past year, and I think the story really just gets going for them. They'll have less distractions. They can focus on their number one market share positioning and the profitability. That's the most important thing, along with free cash flow. Going to generate $5 billion in free cash flow this year. I think by 2026, you're going to see $7 a share in free cash flow. I think the story is still very attractive, and I think it just gets going, as I mentioned. So I'm going to hold on to it.
How big of a holding is this for you
It's my
now?
number 3 position. Yeah. And I'm not touching it.
Okay. All right. Not adding to it.
Not yet. No, I mean, we got a couple bad days, but I'm up a lot.
Yeah.
You know, so I still like it though, very, very much.
All right. What about 3M, which we said is also having a spin this week?
Yeah, I hope it doesn't take 5 years for this one to see improvement. But I do think there is potential. We talk about spins and why they work, and because there's less focus on there's more focus on the primary company, the main company, and then SpinCo also gets their own special attention with separate management team. So I think there's more that they can do just than healthcare. That's what they're spinning off this week. But this company has a lot to deal with, right? And so they've got industrial, they've got transportation, electrification, electronics, consumer, etc. So I think there's some pieces that they can spin off or close or consolidate. And I think this new CEO, Bill Brown, has a fabulous reputation, almost Larry Culp-like. So I think I'm excited to see what he can do for this company over the long term.
You're looking for a Culpian-like move in this stock.
And the interesting thing is there's only one buy on the sell side and 17 holds and sells. So it won't take
Because the
much.
stock hasn't done anything,
That's
right?
right.
I mean,
well, and I just
everybody's
recently
downbeat
bought
on
it.
it.
So we'll see if it can get some legs.
All right, we are going to take another break. When we come back, we're going to look at the committee's biggest winners and losers in Q1. And Mike Santoli is going to join us with his midday word next. senior markets commentator Mike Santoli joins us now with his midday words. Good to see you. So, new quarter, rates are up. You think today's sell-off is in any way some trepidation about interest rates? What's on your mind?
There's definitely a little bit of the attention to the move in yields. We did have an indicator for a higher open before we got the strong ISM numbers and yields started to move. I think that's happening, though, in the context of a little bit of a reversal of the end of quarter action. So we maybe overindulged in some respects at the end of last week. Remember, it was very much a broadening move. A lot of the laggard stocks, a lot of more speculative stuff were being scooped up. I just looked. The 20 worst performing S&P 500 stocks year to date, all but one of them are down today, and almost all of them were up last week. So you had this reversal of a reversal. So you want to wait for that to clear out. But yeah, I think in general, there is this relatively sort of delicate equilibrium we're in where the economic numbers are good enough. Inflation's got to be where it is. And then we see where the Fed and yields go. So I do think that, we're getting tested on that front, but it's not much more to make of it than simply you're up 10%, you haven't had a 2% pullback. Long term, that has positive implications. Short term, maybe you have to digest that a bit.
It doesn't take much, in other words, when you have an overbought market to the degree that we do, to make you say, okay, maybe now's that moment to pull a little bit back.
Yeah, exactly. And we've all been paying attention to the high momentum areas of the market, which have definitely had a slight gut check. So I do think that's what we're watching at the moment. But again, you have to see this market develop one of these little wobbles into something of a more proper pullback. We haven't done that since October.
Yeah, I mean, even the NASDAQ showing some life as we have this conversation. Microsoft, Meta, Amazon, Alphabet are all in the green. Mike, I'll see you on Closing Bell. Thank you, Mike Santoli. Dom Chu, by the way, now has a market flash for us. Dom, what do you have?
All right, so Scott, Judge, we have shares right now, Trump Media and Telecom, which are trading down to the lows of the session right now, down about 23%. $48.20 was the last trade there. This is, of course, the parent company of Truth Social, the social media platform owned by former President Donald Trump. This comes on the heels of them reporting in their latest regulatory filings, their first report as a newly merged public social company, a loss of $58 million for fiscal 2023 on revenues of around $4.1 million. The company also says in the filing that it says, quote, TMTG, Trump Media Telecom Group, expects to incur operating losses for the foreseeable future. The market cap right now is still around $6.5 billion, but just the volatility continues here, Scott. Remember, just 4 trading days ago, this was a $79 and change stock, so we'll keep an eye on this. I'll send things back over.
I appreciate that update. Dom Chu, thank you very much. Up next, we're going to take a look at some of the committee's top stock leaders and laggers in the quarter. We'll trade those as well when we come back. I want to look back at some of the winners and losers in the portfolios of our investment committee. Steph, I'm going to begin with you. Ones that we haven't talked about yet. So one of your biggest winners was Quanta, up 20%. One of your biggest laggards, Zoetis, down 14. Can you talk about both?
Yeah, I mean, Eaton and Quanta are about the same themes, right? It's all about infrastructure and IRA, the spending bill, and how backlog and orders are actually going to.
Eaton was a big winner, also, by the way. But Quanta, 20% in the quarter.
Yeah, no, I mean, because Quanta had a really great quarter. It lagged into the print. But I do think that the grid upgrade is certainly real, and you're in the second inning maybe at best. And in terms of Eaton, I mean, their orders went from 2% to 7% sequentially last quarter. That's what got me to buy the stock, because the momentum is there for both of these companies. They are not cheap, so you buy them on weakness. In terms of Zoetis, I actually think that the Zoetis underperformance is because Elanco has done so well. Elanco is actually up quite nicely, up double digits in the past year, and that's because they have a new product cycle story. And I think there's this perception that now Zoetis has competition. Well, this is a huge industry. It's a $60 billion total addressable market, growing to $130 billion by 2030. So to me, both can survive. Maybe Zoetis a little expensive, and it got a little ahead of itself, but I like both very much for the long term.
All right, Jason Snipes. So we know about NVIDIA being a big winner, and we know about Apple being a big loser. But let's go elsewhere. You mentioned Caterpillar, and that stock's been one of those large cap industrial names near new highs or at highs. So we don't need to do that either. Netflix up 25%.
100%.
Not enough people talking about that move.
Yeah, no. I mean, Netflix has been a tremendous winner this quarter. I think for me, ad-supported tier is obviously working. Password share is obviously working. Their foray into live sports is a new catalyst, I think, which is exciting to investors. So up 25%. It's moved a lot over the last year. So for us, it's not a name that we're adding to, but we've obviously enjoyed the run.
What about Arista, which is up 23% in the first quarter?
Yeah. So Arista's been interesting too. I mean, cloud networking. When I look at AI and AI spend and cloud spend, it's projected to soften in 2023 and obviously exploded due to what generative AI and all that's been going on there. So that's exactly where they play. The stock's up 23%. I mean, EPS was up 48% last quarter. Revenue up 21%. So I like this name. I think it could still continue to play well.
All right. What about Palo Alto? So Palo Alto has been an incredible stock, as many of these cyber names have been. But this one's down, surprisingly, in the quarter, down 4%.
Yeah. So what's interesting about Palo Alto, I mean, again, it was a strong quarter. I mean, EPS was up 39%, revenue was up 19%. The concern for me, and I think the concern for the market, was their guidance going forward. They have a new go-to market strategy, and sometimes as a stock picker, you look at that and say, wait, what was not working? Why are you changing the strategy? That's why the stock has traded back. It's only down 4%.
It was zero last year.
100%. 100%.
Oh, well,
cybersecurity.
All these stocks were.
Except Fortinet, the one I own.
That's another area where people are watching now. As you progress into a new quarter, whether these stocks are gonna, as in Palo Alto's case, sort of snap back,
right?
Or they're gonna be trouble ahead for some of these. Speaking of high flyers,
They're not cheap. That's the problem. But cybersecurity is a huge end market, and it's certainly a place where you want to have exposure. I think it actually could be just as big as AI, to be honest with you. When you have cybersecurity companies getting cyber attacks, that's a problem. And what you are seeing is you're seeing vendor consolidation. There's too many out there, companies that don't talk to each other, so nothing's really working. And so I think the bigger are only going to get bigger, and I think that Palo Alto is one of them. I think Fortinet is one as well.
All right, quick break, and then final trades are on the other side. Welcome back. A couple notes to tell you about. Wednesday, that's April 3rd. David Einhorn is going to be with us exclusively. We're going to be live from the Sohn Conference in New York City, an event that certainly near and dear to all of us at CNBC, raises a lot of money for childhood cancer. David Einhorn's been a longtime supporter of that cause, of this event, and he's going to sit down with us and have an interview about that. We can't wait for that. Closing bell, Adam Parker, Shannon Sakosha, Cheryl Young's a private wealth manager, so I'll see all of you then. Give me a name for a final.
Wynn Resorts held down too long.
Okay, Jason Stipe.
Hilton Worldwide, stay long.
Stephanie Lee.
SLB.
All right, let's see what this market does. S&P is negative, as is the Dow. I'll see you on the bell to take you through the final hour. The exchange is down.
Welcome to The Exchange. I'm John Fortin. Here is what's ahead. Stocks lower, yields higher. The 10-year up by more than 13 basis points on the first trading day after the Fed's key inflation read showed prices moderated in February. But spending remained resilient. And manufacturing grew in March for the first time in 16 months. Our economist sees 3 rate cuts still on the table this year, and she's going to make her case ahead of Friday's jobs report. Manufacturing in China also expanding, breaking 5 straight months of contraction. Is it a blip thanks to the Lunar New Year holiday, or is the country on the brink of a recovery? We're going to discuss whether the bottom is really in. Plus, Macy's pain is whose gain? The troubled retailer planning to close 150 stores over the next few years. We'll take a look at the companies that stand to win those customers. But we begin today with the market action. Let's get over to Dom Chu with the numbers. Dom.
All right, it started off positive. We lost some steam, John, during this session so far as the early afternoon kicks off. So you can see right across the screen, we're down roughly 2/3% for the Dow Industrials. That's 260 downside points, 39,546 the last trade there. The S&P 500, the broader measure, at 5237. That's down 16 points, roughly 1/3% declines there. Meanwhile, remember, at the highs of the session, just to give you context, we were up 9 points in the S&P, so modest, and then down about 25 at the low. So again, modest moves here, but still to the downside. The NASDAQ Composite, the tech-heavier index, is just about flat on the session, down about 0.1%, 16,367 the last trade there. One place where there is decidedly a good amount of green is in gold prices. COMEX gold futures, they get a star right here. They hit an all-time high earlier today. 22.58 is the last trade. They're up almost 1 full percent. If you take a look at the trade overall, we are not far from the highs that we saw intraday. So it's a sharp move higher there, just off the session highs. We'll keep an eye on those gold prices. A narrative of perhaps more rate cuts down the line, perhaps more inflationary pressure, adding to some of those, along with that kind of safety trade haven element. Gold's a very strange beast these days. Nonetheless, it's up big. And then check out what's happening right now with mega cap technology. A huge part of the story for the last several years, and certainly in the first quarter. It's the reason why we had such a great quarter there. But names like Alphabet, Amazon, Apple in focus today. On Alphabet and Amazon, you've got analysts coming out with their tactical picks for the second quarter. B of A likes the Google parent company, Alphabet. Amazon's getting a tactical buy signal or call over at Wells Fargo. Both of those stocks are up. Alphabet, remember, has been an underperformer. And then Apple, I know you guys, John, are going to talk about this later on, down about 1%. But a number of analysts out there with commentary about whether or not Apple can recover from this. This is going to be a big story. We'll see if they carry that trade in the second quarter. John, I'll send things back over.
All right, it's the time for questions about Apple again. Dom, thanks. Meantime, yields higher today as markets process some fresh economic data and look ahead to big reports this week. And our senior economics reporter, Steve Leisman, joins with what's driving those moves. Steve?
Hey, John, you have the combination of data, Fed speak, and technicals inside the bond market now calling into question the market's belief in a June Fed rate cut. Take a look here. The probability of a June rate hike trading just above even money at 57%, even the lowest levels we've seen after trading near 75% 2 weeks ago and 62% last week. So it's a sinking probability there. What's more, the futures market now growing, in fact, more hawkish than the Fed itself is. The January Fed funds contract trading at 466. That's above Fed officials' own median forecast of 4.6 for the year-end fund rate. It is just a bit above, but it had been below for a very long time. All of this happening alongside a surge in yields of both the 2 and the 10-year. The 2-year rising a strong 9 basis points where it closed on Thursday afternoon. While yields started the morning higher, they got an extra boost from stronger than expected ISM manufacturing data in the rear view mirror. That is, the February inflation report is apparently not looking as benign as some thought, including the Fed chair, thought it might be. Looking ahead, though, the jobs report is forecast to show a weakening in payrolls, but to a still strong 200,000. The unemployment rate forecast to dip a tenth to 3.8, while wage growth picks up month to month, down year over year. There's plenty to bother the bond market here. You got a lot of supply. You have an outlook for inflation that's uncertain, and the Fed. The rise in yields is also happening in the context, John, of improving growth, which looks to be helping stocks in the face of these higher yields. And just one more data point, the Atlanta Fed boosting first quarter GDP to 2.8%. That is up half a point on the stronger data, John.
Yeah, so Steve, it looks like we went from good news is bad news on the economy versus, stocks to good news is good news to maybe now good news is so-so.
Or what about this? What if good news is good news for the stock market and good news is bad news for the bond market? I will point out that you have these higher yields and they have been going higher. The stock market, yeah, it's off a little bit today, but not the kind of off you would have with 9 basis points. And then also take a look, John, at what's happening, the DXY, the dollar up over 105 right now, which is a pretty strong number. And I'll agree with Dom, the part where he said gold is weird these days. It is rallying in the face of fewer rate cuts expected. It usually goes the other way. And there's that dollar at 105, the DXY index, John.
All right, Steve Leisman, thank you. And now both my next guests believe the Fed is on track to start rate cuts mid-year. One says more accommodative monetary policy will be a potential driver of the next bull run in equities. Joining me now, Stephanie Roth, Chief Economist at Wolfe Research, and Caterina Simonetti, Senior VP and Private Wealth Advisor at Morgan Stanley Wealth Management. Good afternoon to both of you. Stephanie, the economy doesn't need below-trend growth now for a soft landing to happen, you say. What does that mean for the Fed's flexibility on cuts?
Yeah, what we've seen is you can have strong growth and inflation that continues to moderate. So we're getting this non-inflationary growth, which is what we saw on Friday in the PCE report. PCE came in at 0.26%. The street was looking for 0.3%. And the surprise really was on the consumer side, which came in really quite robust. So we've seen these trends where the supply side of the economy continues to rebound, and that's allowed strong growth and inflation to continue to moderate. We very much believe that January was largely driven by seasonality, and the Fed is leaning on that too, which is why the Fed's likely to still be able to cut in June. We don't have to necessarily be scared of these stronger data points because inflation continues to remain really quite modest.
Okay, so Caterina, what does that mean for fixed income? I keep hearing that wealthy investors are looking to lock in these higher yields increasingly at longer durations.
Absolutely. John, rates are on the way down. Now, we might not know the timing, and we might be unable to predict whether Fed is going to have 3 rate cuts this year or 2 rate cuts this year. But we know that rates are going towards the lower points. So investors are taking in these opportunities to lock in higher rates, both on the municipal side and on the corporate side, and extend the duration because, let's face it, the 5% money market is something that we feel like has been around forever, but it's only been here for a short time frame. And we need to know that, this is something that's not going to last. So both on the stock side, when we need to take advantage of the buying opportunities, in the quality sector, the sectors of the market that didn't have the run up yet, and also some, decent amount of profit taking in the sectors and in individual positions that had big run up. And when our clients are asking us where should they allocate, these profit taking proceeds, we tell them take a look at the fixed income and take advantage of the higher rates.
I'm still not bored with 5%. It's still exciting to me. I don't know. Stephanie, the spending from the consumer continues to be such an important part of the picture here. But I don't know. I keep looking over at the debt levels and the defaults that are starting to pile up. But then the jobs picture is pretty strong. So does that sort of keep things in balance for the economy?
Yeah, as long as the job market remains firm, then the consumer will keep spending. They'll spend in line with their income growth, which is, in a real term, should be somewhere around 2 to 2.5%, and then the economy should hold up just fine. So you've started to see some pickup in delinquencies, but that shouldn't be an issue as long as the consumer is employed. And what we've seen so far is the labor market has been incredibly robust, And that should remain the case because company profit margins are really quite high. And there's no reason for companies to do massive layoffs if their margins are quite healthy, and in which case the labor market should continue to be solid. The biggest expenses that companies have are capital spending and employment, and as long as their margins are healthy, they're going to keep spending on that. And we should see that throughout the course of this year.
So, Katerina, speaking of profit margins, you're particularly focused on stocks of companies that have shown operational efficiency and look to continue that. How are you filtering through that, and what are you most focused on there?
John, there has been a lot of conversation about AI lately, and in our mind, it's not just a gimmick. You know, we see AI as something, as this pivot that can really bring operational efficiency and competitive positioning to the companies across the sector, specifically in financial services, in healthcare, in defense, in utilities. And so, you know, when we look at the companies that are increasing profitability, that are responsible with their costs, and also that are, you know, delivering attractive valuations, in our view, this is where, you know, the portfolios should be positioned. And this is the good time, you know, especially after this run up in the market that we saw in such a short time frame, to take a look and make sure that our portfolios are appropriately balanced, because this is really the key factor that is going to, you know, play a huge role in the long-term profitability, but also in the risk management side.
Okay. And you say consumer staples, healthcare, and utilities are the sectors you're most focused on.
That's right, but we also just increased our position in energy to overweight because of the consumer demand and attractive valuations. So another sector to be considered.
All right. Thank you, Stephanie Roth and Katerina Simonetti. Meantime, industrial giants GE and 3M are spinning off parts of their businesses this week. Just the latest in a growing corporate trend, and Seema Modi is back. Welcome back, Seema.
Thank you, John. I've had a lot of great experiences, but nothing compares to being a parent, which
it's like your own spin-off, yeah.
Yeah, it is, exactly. We need more of them, actually. But speaking of what's happening in the industrial space, we're seeing a number of spin-offs, and they're all happening for different reasons. So, for example, 3M spinning off its healthcare business, its highest margin business, due to the liabilities it was facing on PFAS and earplugs. The company will receive $7.7 billion dividend from this spin-off, which will make it tax-free for shareholders. The company still owns a 19% stake in Solventum, which it will monetize over time. The industrial giant will welcome a new CEO next month, Bill Brown of L3Harris, who Melius analysts say will be taking a page out of Larry Culp's playbook and turning around, or trying to turn around, a great American company. Speaking of Culp, simplifying GE's story has won him praise, from selling biopharma, spinning off healthcare, and now on the verge of divesting its energy business tomorrow. Shares of GE, meantime, have gained about 40% this year. According to Goldman Sachs' David Dubner, who heads up M&A restructuring, he says higher interest rates, fewer private equity deals, and shareholder activism have all contributed to more spin-offs this year. We've seen about 15 in 2024 spin-offs, and that compares to the 8 deals that we saw in the first quarter of last year. So we're seeing more come to the table.
Yeah, it's interesting. It's been such a moribund IPO market. The idea that large companies would find this a comfortable market to spin things up. And we saw Intel a while ago do it with Mobileye. They're planning to do another one with the FPGA business. It's operating clearly by different rules, I guess.
It is. And then there's Western Digital looking to spin off its flash business. That's mostly due to Elliott Management, and again, activism playing a role there. So there are different reasons many companies are finding this to be a go-to strategy. One way to unlock value that they think is hidden from the market, and another reason is just to make it more appetizing or attractive to retail investors who want more simplified ways to invest in stock stories.
And I guess, like you seem to allude to right there, if you've got a couple pieces of the business that have different margin profiles or different growth profiles, it's an attractive environment to try to point that out.
Yeah, I mean, we keep saying it, but bigger may not always be better for a lot of these companies, and that's why taking a simplified approach may actually work out better over time. In fact, the data does support that from Goldman Sachs that shows that 1 year after a company spins off, it tends to outperform its parent company by around 6%.
Okay. They argue for getting smaller, and then they argue for getting bigger.
It just depends, seasonality.
Seema, thanks. By the way, do not miss an exclusive interview with the CEOs of GE and GE Vernova. That's tomorrow morning on Squawk on the Street at 9:30 a.m. Eastern. Now coming up, China manufacturing is growing at its fastest pace in more than a year, boosting those stocks to their best day in more than a month. Does this mark a bottom in the Chinese market? We will debate. Plus, Macy's downsizing its department store footprint. Does that open the door for its off-price competitors? We're going to look at the opportunities and challenges ahead when The Exchange comes right back.
This is The Exchange on CNBC.
Welcome back to The Exchange. The Shanghai Composite climbing more than 1% today and up about 3% this year after the latest economic data signaled the recovery there might be gaining traction. According to a private survey, China's factory activity came in at 51.1 in March, the fastest pace in 13 months. Meanwhile, the official manufacturing PMI was 50.8, the strongest reading since last March. And my next guest says this could mark a bottom for Chinese stocks. Joining me now with more is Marco Papic, senior strategist at Clock Tower Group. Marco, welcome. So on top of all this, the China Securities Regulatory Commission has a new chairman over the last couple months, and that historically tends to mark a bottom. Should we believe it this time?
No, I think eventually the answer will be yes. My concern right now is that while we've had a pickup in manufacturing activity, which is really a global phenomenon, by the way, you saw that in the U.S. as well this week, the problem is the domestic economy really relies on credit growth. And total social financing, the TSF number that we all watch when we think about China, is actually down 12% for the combined January and February months, which takes out the effect of their new year. And that's a problem because that's the lowest reading since 2012. So the stocks have bounced back on rumors of policy support, but we actually haven't seen any fiscal support thus far. So I think this rally will have to go back to the bottom of January, and then I think you will have a great entry point later this year in Chinese equity.
You mentioned the comparison in manufacturing growing both in the U.S. and China. I wonder about the credit versus capacity comparison as well. I mean, we're seeing more and more consumers in the U.S. use more and more credit. That's spending beyond their means. Is that a concern in China as well?
Yeah, it is, because they've been doing it for 10 years. You see, so this is a very important point, and I mean, you nail it right there. In the U.S., we've had 10 years of deleveraging. So the private sector, by 2020, was pretty much done with about a decade of deleveraging. So your point that they're taking on credit, that's true, but it's not yet in a dangerous territory, because in the U.S., we've been only doing it for about 4 years. And on top of that, U.S. households got that $3 trillion worth of stimulus, 2020, 2021. In China, they are where we were 10 years ago. And so they're in that decade of deleveraging, and that's why we're constantly being disappointed by their credit data. And that's why I think it's very difficult to invest in anything in China that depends on domestic economy. Now, externally focused companies, Chinese companies that are selling abroad, they're benefiting from American consumption and European recovery, and that can be an investment strategy, I think, for the remainder of this year and into next year.
Well, what's the strategy, what's the sense in investing in an externally focused Chinese company versus investing in the market that company tends to focus on?
Well, you know, it's like, for example, the situation in Germany. Right now, the DAX is at all-time highs, the German equity market, even though German economy is effectively in a recession. And so if you have externally oriented equities and indices, they can do well even if the domestic economy is suffering. So in China's case, there will be a lot of EV manufacturers, battery supply chain, alternative energy companies. They should do well anyways. Plus, because of the situation at home, the currency renminbi is quite weak, which makes those companies quite competitive. Of course, there's tariff pressures, there's politics, there's nationalism, protectionism. Those are all big, long-term risks. But for the next 6 to 18 months, these companies can do very well. However, for most investors listening to this, you know, this is way too detailed of an investment strategy. I would just say, look, the bottom line here is that domestic credit is not confirming a rebound in China. And on top of that, the government is imposing austerity, kind of like we did in 2010, 2011 when the Tea Party came to power. You know, same things are happening in China. They're actually trying to narrow their budget deficit at the same time the private sector is deleveraging. So if you're just trying to buy Chinese equities, I would punt on this tactical rally, and I would wait for policymakers to commit much bigger support for the real economy.
Okay, yeah, that's part of what I was wondering about when you started pointing out those names in those industries that might tend to do well, because it seems to me whenever there are some companies or some industries in China that are doing well when the overall economy is not, that's just inviting the government, the Communist Party, slapping them down, making an example of them. Remember Jack Ma? Remember when he used to dance?
No, that's for sure. And look, Chinese government has priorities. It's hard tech over soft tech. So it's really all about manufacturing. It's about competing with American and European manufacturers. So I would stay away from internet companies, which, by the way, have done very well over the last couple of months in this rally. And that's another reason why I don't think this current rally is really sustainable.
Okay, so if you've been in those names, it sounds like you would suggest maybe getting out of them or having a strategy to get out of them and into that more hard tech that the Chinese government tends to view as more strategic, if you're going to play in China at all.
If you're going to play in China at all, that would be a good strategy, absolutely, yeah.
All right, and then what about the overall environment in the region? How is that affected by these dynamics in China?
You know, it's very interesting. Japanese equities have been one of the biggest beneficiaries of just the entire thesis that China is uninvestable. You hear a lot from very large allocators managing hundreds of billions of dollars. They basically extracted themselves out of China for a number of reasons. The things that you're talking about, government interference in the free market, American, of course, focus on China as a geopolitical rival. So a lot of large allocators have basically gone to two equity markets. India, if they require an emerging market allocation, or Japan, if they're just moving in their global asset allocation. So on the Japanese side, we've seen a very good performance by Japanese equities over the last 18 months. I think that will continue. think Japan as an economy is well geared for the kind of a macro context we're in. Lots of things are being built, lots of industrialization everywhere. You're going to need somebody to pick up the slack from China from that kind of manufacturing perspective. And I think that these dynamics will likely continue. India could be at risk, by the way. It is a very expensive market. So if you're trying to pick and choose between emerging markets, and China actually puts a bottom with fiscal support by the government, look out for Indian equities. They could actually start underperforming.
Okay. They have been performing well, so we'll watch out for that. Marco Papich with Clock Tower Group. Thank you. Now, still ahead, Apple shares coming off their worst month since September. The stock has yet to post a positive month to start the year, and one Wall Street firm says the fall is far from over. The details and where there might be more weakness ahead. And as we go to break, here's a look at some of the names hitting all-time highs today, including Micron, General Dynamics, Alphabet, Progressive, and Diamondback Energy. It's not all green out there. Stocks are lower across the board. Dow, S&P, and NASDAQ near session lows. We're back after this. Welcome back to The Exchange with major indices near session lows. Time for some show and tell. We show you a chart and tell you a story. This one has some suspense. Disney shares slightly lower ahead of Wednesday's annual meeting where Trian's Nelson Peltz hopes to win a pair of seats on Disney's board of directors. The stock is coming off its best quarter since 2000, up 35% to start the year. But if Peltz wins the proxy fight and CEO Bob Iger leaves the company as a result, Disney board member Carolyn Everson told Squawk on the Street this morning it could mean trouble ahead.
I think that would be a terrible outcome for Disney. We're talking the future of Disney is at stake here. That is why this vote is so important. Bob is just in the midst with his leadership team of a massive transformation of Disney.
All right, now to Tyler Matheson for CNBC News Update. Ty.
All right, John, thank you very much. Welcome, everybody. Iran's consulate in the Syrian capital Damascus was destroyed today in a suspected Israeli airstrike. That is according to Syrian and Iranian state media. Israel has not commented, but has carried out strikes on government-controlled parts of Syria for years. Reuters reported that a senior commander in Iran's Quds force was killed in the strike. President Biden will visit Baltimore Friday to visit the site of the Francis Scott Key Bridge that collapsed last week. The president will meet with state and local officials and get a look at the federal response efforts there as the White House works with the state to reopen the port and eventually rebuild that bridge. And after an Easter weekend storm stranded motorists near Big Sur in California, traffic on California's iconic Highway 1 is slow but open once again. Parts of the highway collapsed during the storm south of Monterey, sending chunks of the road tumbling into the ocean and leaving some motorists stranded overnight. The famous Route Beautiful road has been prone to frequent closures from weather impacts in recent years. John, back to you.
And even in not so recent years. Tyler, thank you. Coming up, Macy's closing a quarter of its stores across the country as part of its turnaround strategy. But between closures, layoffs, and pressure from activist investors, is the company's pain its competitors gain? We're going to tell you which brands could benefit the most next. And there's still time to register for the inaugural CNBC Changemakers event in New York City on April 18th. We're going to hear from some of the women transforming business, including Commerce Secretary Gina Raimondo. To request an invite, you can scan the QR code on the screen or go to cnbcevents.com/changemakers. Be right back. Welcome back to The Exchange. Shares of Macy's up a little more than 1% since announcing its plans to close about 150 stores. It's more than a quarter of its U.S. locations back in February. And those closures could create an opportunity for other retailers to swoop in and gain market share. Joining me now to discuss who will come out on top, Corey Tarlow, head equity analyst at Jefferies, covering discount and specialty retailers, along with CNBC.com reporter Melissa Repko. Guys, welcome. Melissa, set this up for us. There are a lot of TJ Maxx stores close to Macy's stores. TJ Maxx, TJX has been doing well. Macy's haven't. Why is that? I mean, when I think Macy's, I think malls, and when I think TJX, I think strip malls. I don't know if that has anything to do with it.
It comes down to a couple of things. People like strip malls, and they're just perceived as more convenient for people. And so some of it comes down to the same sort of thing as real estate, location, location, location. And if people want to get in, get out quickly, being in a place where they are grocery shopping, like a TJ Maxx, is more convenient than circling around looking for a parking space at the mall where Macy's is. So that's a factor here. The other dynamic is that people are looking for a deal, and a lot of the brands are very similar at Macy's and TJ Maxx, but people can get them for cheaper.
Corey, weigh in here too, because when I look across the discount space, not everybody's doing well. I don't remember which one it is, Dollar General or Dollar Store. Somebody's closing a bunch of stores while somebody else is doing well. So it's not all about mall malaise. What's the difference?
I think with off-price specifically, this is a concept, given their rather opportunistic buying model, the convenience and small format of these stores, it generally bodes well for consumers across various income demographics because they offer a good, better, best assortment, specifically at TJ Maxx, that's relatively close to a lot of consumers' homes in the U.S. And as you think about these prices that are 40 to 70% off conventional brands that you find in department stores, it tends to make the value offering very attractive given the value and proximity.
Okay, Melissa, it was Dollar Tree and Family Dollar that I was trying to remember, closing about 1,000 stores right now. How are they doing that while TJX is doing pretty well? I think there are other retailers who are off-price who are doing particularly well. I can't remember which one just reported earnings. You probably do. Is it staffing? Is it, again, location? Is it just the assortment that they're able to put out there?
You have to think about the customer. So compared to a Dollar Tree or a Dollar General, Macy's has a more affluent shopper, and that's why there's more overlap with TJX and even brands like Target or the higher end customer that goes to Kohl's. And Jefferies actually looked at this, Corey looked at this, that, if you look at where that customer shops, it's not just that they're looking for price, they're also looking for some of those more higher end names. And so that explains why we're seeing growth of some retailers and closures of others. Like, I spoke to Target CEO Brian Cornell, and he mentioned Macy's and the closure and the opportunity that he sees for Target. And he said, this is an opportunity we've had before. When we've seen boxes close like Toys R Us in the past, we've moved into some of those locations. And now this is kind of playing out again, but with a different name. Of course, Macy's is saying, as we close stores, we're going to invest in ones that are better performing. So they're saying these ones are already underperforming and perhaps already losing market share to TJX and others.
Corey, is it me, or is this a time of unusual volatility at the high and low end for the consumer? Aspirational luxury is taking a hit right now, and a lot of luxury brands are having to focus in on that core customer who's still going to spend. And we're talking about the difference here in discounters as well.
Well, one of the things that's been quite popular nowadays has been trade down. And you see it from regular specialty stores into off-price. You're seeing it within certain channels like Walmart, where consumers are trading down from brands to private label. I actually just last week hosted meetings with Walmart and Target executives with investors here in Manhattan. And what we saw was, even at those largest retailers, consumers are continuing to trade down into private label. At Walmart, that's a $100 billion business on a $600 billion enterprise. At Target, it's roughly a third of the mix, and it's continuing to grow. And these businesses are continuing to invest in private label, and you're seeing trade down from a lot of those higher, more luxury brands into this category that also helps support better margins too. And so that should bode really well for both sales and profitability ahead for a lot of these retailers.
Corey mentions a really good point that with discretionary spending, that is under pressure. And that cuts across the board from everyone from Macy's to Walmart. But Walmart is better positioned because of having that stronger private label brand and having more of a value reputation, kind of like a TJX. That being said, some of the players like Kohl's, I spoke to Kohl's CEO Tom Kingsbury. He's saying we can grow as Macy's shrinks, but worth noting that Kohl's is under pressure as well and is seeing people buy fewer clothing items, fewer shoes, and it's fair to say they're losing some share to TJX as well.
Corey, where does digital and omni-channel fit into the picture here?
It's a great question, John. I think that one of the most important things to note about digital and omni is that in the off-price landscape, it's actually relatively non-existent. So Burlington had an online presence and they actually got rid of it. Ross is completely in stores, and TJ Maxx has a very modest online assortment that we estimate accounts for a very small percentage of sales. So in spite of the uptick that we've seen in digital, Target's digital penetration has gone from high single digits now close to around 18% or close to 20%. Walmart's digital penetration has continued to rise. That's run rating at a $100 billion business online. Off-price, it's much less meaningful. Why? Because these businesses want to drive brand-protected sales that is not necessarily visible entirely online to consumers broadly, so that off-price can serve as an effective clearance mechanism for a lot of brands that need to get rid of excess inventory.
All right, I guess one size doesn't fit all. Corey, Melissa, thank you. For Melissa's story, once again, go to CNBC.com. Now coming up, it's been a volatile month for Apple. Shares down more than 5%, and Loop Capital sees more pain ahead, saying street estimates for iPhone sales and revenue could be 20% too high for the June quarter. Just how far could Apple fall? Well, that's next. Welcome back to the Exchange. Apple, one of the worst performers in the Magnificent Seven this year, might now just be the Fab Four, down nearly 12% in the past 3 months, and more negative sentiment from Wall Street today. But could there be some upcoming positive catalysts for the tech giant? Well, Steve Kovac joins us now for today's Tech Check. Steve, on the one side, I won't say on the one hand.
On the other hand.
Yeah, because it's Monday. We've got iPhone weakness. We've got this DOJ suit. On the other side, we've got high loyalty WWDC, the developer conference coming up, and Apple tends to be very practical about trends like AI, and we haven't really seen their play yet.
Yeah, and so we don't know. That's the big question looming ahead. But today's news is this Loop price target cut down to 170. They were as high as, I think, 185 pretty recently. And they're basically saying calendar year 2024, sales and earnings could be down. And they're saying that hasn't happened since 2016. And look, a lot of it is happening in China. We know the economy's in rough shape over there. We know in the December quarter for Apple, sales were down 13% overall. And just drilling down on just the iPhone in China, really bad data coming out for the first bit of the year. The most recent data, we have February numbers now, some estimates saying that iPhone sales were down as much as 16% for February. We don't know March yet, and of course we'll get earnings in about a month or so here. But the thing is, when does China turn around, and how can it turn around? Tim Cook was out in China last month and met at the business forum, opening up a new store. Does the consumer turn around there? And then the other question is, of course, what is this AI announcement that we're expecting to come at WWDC? How does that drive, again, iPhone sales? And then further out, September, we have the regular iPhone event, the iPhone 16. What can that do on the AI front that makes people want to upgrade? Not because, they need a new phone, but because they want the new iPhone and maybe they'll upgrade a little sooner than expected.
We've got the China situation that's not necessarily just about the Chinese economy. We see some possibilities that could be turning more positive, but also about Chinese sentiment toward a company like Apple.
And a little company called Huawei is causing problems for Apple too. And they started making phones again last year. And we've seen evidence that they're eating into Apple's market share. For the first couple years throughout COVID, Apple, when Huawei stopped making phones, we heard a lot from Apple about how many people in China were switching from Android back to iPhone, and now we're kind of seeing it go the other way. So that is another one. Luke points out as well, don't count out Xiaomi, by the way, which is often referred to as the Apple of China, also causing pressure and more competition. So yeah, there could be a little bit of nationalistic buying on that sense, and also just, literally Huawei fans excited that there's a new Huawei phone that they can buy. That's definitely hurting them. By the way, those are cheaper phones.
For investors, though, who are wondering when there might be an entry point for Apple, I can't help but notice that Apple has some advantages in the AI era. One, everybody, Google, Microsoft, want placement on the iPhone and are willing to pay for it. So
pay a lot of money too.
Yeah, a whole billions upon billions of dollars for it. And then also, a lot of what these companies are doing are trying to vertically integrate in order to get better performance out of AI. Apple's already vertically integrated. They design their own chips and hardware and software. When they make a move in AI, it could be a very fast.
And just that. But then the question becomes, as we heard 2 weeks ago, that they're partnering with Google again, or likely to partner with Google, and in China, likely to partner with Baidu. So what does that relationship look like? Which ways? That seems like almost better for Google than it is for Apple. If they're relying on that, it gives Google more. That's why we've seen Google or Alphabet shares recover so much the last 2 weeks on this news, that it either gives them more exposure for Gemini AI, or they're going to collect money from Apple if Apple ends up licensing Gemini for all these users too. So that becomes a real question. What kind of vertical integration do they have? What is their own internal AI thing? And we might not hear that till the next iPhone cycle, because I can bet you what they'll do something like, okay, if you want the best AI stuff, you got to buy that Pro model.
You really think Apple's going to pay though, or is Google going to have to pay for the
It feels like they would. I feel like it would be the other way around. We just don't know. But yes, of course, they want access to a billion plus iPhone users. Of course, but it's a good thing for them either way. And that's already baked into them. They pay billions of dollars to all these other platforms in order to be dominant on those platforms. So that's, by the way, DOJ doesn't like that.
Right.
Yeah.
DOJ doesn't like much these days. Lots of big companies doing big things. Steve Kovac, thank you.
Thanks, Sean.
Well, coming up, Mag 7 stocks managing to eke out a gain today, building on the first quarter's nearly 18% gain. Up next, we'll get a look at some of the quality names one trader says have been left high and dry by the big push into tech. That's when the exchange returns. back to the exchange. 2024 has been a strong year so far for the Magnificent Seven, up more than 17%. But what about the high-quality names that have been left behind? Well, we'll dig into them in today's 3 Buys and a Bail High and Dry edition. And here with our trade is Chris Grisanti, MAI Capital Management's Chief Equity Strategist. Let's start off with your first buy, Bristol-Myers Squibb, down 23% in the past year, but coming off its best month since 2022 as the company looks to quell concerns about expiring patents with 2 major acquisitions and new treatments in the pipeline. Chris, why are you a buyer here?
Well, John, first of all, thanks. It's good to be with you again. First, let's step back and talk about the Mag 7 real quick. Money has gone in that direction, but they've done us a favor. They've left these other things high and dry, as I like to say. Some of them at record low valuations, record high dividend yields. Getting to Bristol-Myers, less than 8 times earnings. It's yielding over 4.5%. It's got $12 billion in cash flow. That's more than 10% of the market cap. This is a classic story we've seen over and over again. The negative story is well known. They have drugs that are going off of patent. Their sales will slow for the next several years, so investors look elsewhere. But what investors are overlooking is that they can use that great cash flow to make the acquisitions that you were talking about. Then the earnings growth will start to go up. At the same time, when investors start to see that, they'll bid up the shares. The multiple may grow also. So you'll get a double virtuous tailwind, and you could make 50 or 60% on that kind of name without really risking anything higher than a 12 or 13 PE. So we like that kind of story.
All right, that sounds good. Next buy up, Verizon. It's up around 10% in 2024 after posting strong subscriber gains in Q4. Redburn Atlantic bullish on those gains, but warning that it took more than $50 billion in 5G expansion to get there. So Chris, why buy here?
So they're making a good point, but I think they're also looking in the rearview mirror. They're absolutely right. That 5G stuff is expensive stuff, but that has already peaked. And so Verizon, again, because of this tech capital grab, has sold off with the other slow-growing stocks. At its bottom a couple of months ago, it was selling at less than 6 times earnings. It's done a little better. It's now less than 8 times earnings, 6.5% yield. The average multiple is about 13 or 14. So if you can get back just to the average multiple as cash flow starts to increase because the cap spending is going down, we get paid 6.5% to wait. Again, we're looking at a not heroic guess of a 50 or 60% return over a couple of years as the world returns to normal. No heroics here, John.
All right, I see you making that connection. Now for the final buy, Hershey. Pour one out for the chocolate Easter bunnies. It's down more than 20% in the past year in the face of spiking cocoa prices. Barclays noting that the company is nevertheless gaining back share from Mars after a few months of weakness with significant strength in salty snacks. Chris, you're bullish on Hershey.
I'm bullish on Hershey. And I said there was no heroics with Verizon and Bristol. You got to have a little heroics here with Hershey, John, because cocoa prices are just going up unbelievably. They make NVIDIA look like a slacker. Cocoa prices are up over 100% this year. And that, of course, is Hershey Chocolate's biggest raw ingredient cost. So in the face of that, what that's doing is masking terrific execution at Hershey. So they're hitting on all cylinders. They're just facing a hurricane-like headwind of enormous rise in cocoa prices. So if you can imagine cocoa prices moderating and, God forbid, going back down to where they were over the course of a year or two, Hershey's continues to execute. Investors come back, the multiple goes up, and once again, you've got a stock that's been left high and dry that can take off without a lot of huge risk to the downside, I think.
Okay, I hear you. But NVIDIA is up 82% year to date as well. All right, now for the bail. Boeing down more than 25% in 2024, set to undergo a management shakeup at the end of the year after the MAX 9 door plug blowout was just the latest in a series of quality issues Citi, however, maintaining its buy rating, citing robust demand for new aircraft. Chris, you're throwing in the towel here. You're not optimistic.
I am, John, and I'd like to be optimistic. This is the kind of stock that value investors like us would like, because obviously it's a great market position. That the aircraft market as a whole is a terrific place to be. It's growing worldwide. But having said that, I still don't think the company has gotten religion. Clearly, there's deep issues of quality and safety that they're working on. So they're going to change management. That's great, but they're not going to change till the end of the year. So clearly, this is a show me stock. But the show won't even start until next year. So I'm quite disappointed in a stock that I'd like to own, but I think that the board of directors here really hasn't done its job in terms of making the changes it needs to make, and also telegraphing that things are different this time. So,
all right, we'll leave it there. 3 buys and a bail. Chris Grisanti, MAI Capital. That's going to do it for the exchange. Power Lunch starts on the other side of this quick break.
Good afternoon, everybody, and welcome to Power Lunch. Alongside Courtney Reagan, I'm Tyler Mathisen. Glad you could join us on a Monday. California's new minimum wage law takes effect today, $20 an hour. We'll talk to the CEO of Raising Cane's, which has nearly 100 locations in the state, about the real impact of this wage hike.
And stocks getting a speed bump on the way to Dow 40,000. Friday's inflation data and subsequent comments from Fed Chair Powell leading the markets to believe the Fed will cut rates later rather than sooner. That's a big reason stocks are pulling back today. On this first day of the second quarter, the Dow Jones Industrial Average, that's the laggard, down about 0.7%. S&P 500 down about 1/3%. NASDAQ down, but hey, only just marginally. Plus, the S&P 500 was up more than 10% in the first quarter, so it might not take much to convince investors to take some of those profits. Let's bring in Mike Santoli now for where on the market stand. Mike, how much of this is seasonality when you're talking about the turning of a quarter?
There is a little bit of an unwind, I think, today, based on some of the very, very end of quarter action yesterday. I'm not sure it's broader seasonality. I do think it's a market that's earned a rest, not just up 10% in the S&P 500 for the quarter, but in a steady fashion for 5 months, 5 straight up months, 2 straight up 10% quarters. So you can kind of pile up these superlatives. You look at what's happened historically after similar periods. We haven't had a 2% pullback in 5 months, for example. It all nets out in a similar place, which is longer-term uptrend intact. It's probably not the ultimate peak, but you ought to expect a little bit of a give back in the meantime. The other thing I'd mention is the yield move up today. 10-year treasuries toward 4.3. We got some strong economic data. Caused us to rethink about the Fed. So that's sort of a natural place to maybe locate some of the selling, because the downside drivers of the Dow today, the two biggest ones, Home Depot, Goldman Sachs, so rate-sensitive moves.
What we will hear endlessly over the next couple of months is the old cliche, sell in May and go away.
Yeah, for sure.
Maybe April is the new May, but given the weather, maybe April's the new February.
That's right. So hard to actually pull that apart from what the single cycle, kind of handicapping is going to be. In other words, yes, broadly speaking, the best returns are the 6 months from November through April. That's just the way it's gone for many, many decades. However, I always say that's climate, that's not weather. That kind of tells you general tendencies, because, we should have had some pullbacks, for example, in late February, based on all the seasonal patterns. We didn't get one. April has actually itself been a very strong month. Maybe we'll get some turbulence around tax payment deadlines and things like that. But I don't know if that's going to be the driver. To me, it's about, does the economy hold up? Is the Fed still going to be poised to cut into a record stock market high and a good economy, or not? Yeah. And that's, to me, where the debate's going to hash.
Yeah. Was there an inflation number that came out late last week?
On Friday morning.
On Friday morning, which the market didn't really have a chance to react to until today.
And interestingly, I think the number itself was palatable. In other words, it was good enough. It didn't show a continued acceleration in inflation. But then this morning, the ISM manufacturing numbers came out, and it just seems as if there are parts of this economy that are kind of reawakening at a time when nobody's convinced that inflation is coming down. Prices paid within ISM was higher. Anyway, the point is, there's a reason to kind of be concerned if you're inclined to think inflation is going to be stubborn at these levels. And so that's why the bond market's kind of pulling out that possibility of a near-term cut yet again.
All right, Mike, stick around as we bring in our next guest, who says the market still has strong support from solid growth, but wouldn't be surprised to see a pickup in volatility this quarter. Dan Suzuki is Deputy CIO at Richard Bernstein Advisors. Dan, welcome. Good to have you with us. How do you explain today's action in the market? Is it a little bit of reaction to the inflation number last week, maybe to the ISM number today, a little bit to the fact that we've had back-to-back excellent quarters, as Michael points out, and maybe it's time for a little breather? What is it?
Well, I think everything Mike said was spot on. I think the market's really trying to balance the two sides of the growth coin. On one hand, growth is coming in hot, growth is coming in strong, and I think the market likes that, and I think that bodes well for this coming earnings season and the earnings seasons to come. But as Mike also alluded to, you're seeing a lot of stickiness in the inflation numbers. You're seeing that in the PCE number we got last week. You're seeing that the ISM report this morning. And remember that inflation lags growth. And so if growth numbers continue to come in hot and you're starting to see that flow through to inflation, I think at some point you do have to worry, that's not only going to come with a good reaction, but there's going to be a negative reaction given, what the Fed's response is.
The market is an instrument that discounts future profits. Walk us through the prospects for future profits.
Yeah, I think, listen, there's tons of people that come on your show and proclaim that they can see exactly what the world's going to look like in a year's time. I have yet to meet anybody that's very good at that and predicting the future that far out. I think the next best alternative, which is where we hang our hat, is looking for the signs that growth is rolling over and inflecting. And the reality is we're just not seeing those signs. I mean, people have been bearish on the economy for years now, but growth continues to show signs of not only resilience, but actual acceleration, including today's ISM report. So I think that, underlying the surface of everything, earnings growth is going to continue to accelerate. Now, the drivers of that earnings growth may shift a little bit in terms of the mix, but while earnings growth continues to improve over the next 1, 2, or 3 quarters, I think that's a good time to be in markets, and I think that provides that strong support that we started the conversation.
Mike, we are 6 minutes into the show. We haven't talked about the Magnificent Seven yet.
Yeah, that's right.
These big mega cap stocks.
We haven't said NVIDIA.
We haven't yet, so let's do it now, NVIDIA. How important is all of this to the market where we stand now?
Well, what's interesting is they've grown a little bit less important over the last month. I think the big question really going into March was, can the market not rely on those handful of stocks for the upside? Well, tech underperformed in March in general. And really, you had NVIDIA working, Microsoft's hung in there fine. Apple is still a wait today. And that's actually been down 10+% for the year. The market's held up well. Why? Because a lot of stocks that were still getting back their losses from 2022. I mean, regional banks started to act better. A lot of cyclical parts of the market have managed to catch a bit. The question is, can we have this magical perfect rotation, indefinitely? Or is it at some point we're going to fumble the baton as we hand it over to another sector and get a proper pullback? That to me is the bigger question. But so far, I don't think you can completely have the AI story, go cold. But for now, it's good enough, and NVIDIA's up again today.
I think the Wall Street Journal, Dan, this morning said the Magnificent Seven has now become the Fab Four, when you take out Apple, Tesla, and I forget which other one. Or maybe it was Alphabet. What is your reaction to that? Is it a good thing that maybe we're not as dependent as the market was on 7 stocks alone to pull it forward?
Well, 100%, Tyler. I think it's extremely bullish that you're seeing the breadth of this market really broaden out, because if you go through bull markets historically, you've never had a sustained bull market that was incredibly narrow throughout its full period. So I think that it's a necessary requirement to see breadth broaden out. And I think the reason behind the breadth broadening out is that earnings breadth is really broadening out. And I think that's the key inflection point looking forward, is that Magnificent Seven earnings, while continuing to be very, very strong from an absolute growth level, those growth numbers are actually set to decelerate in the coming quarters, whereas the rest of the market is what's going to be driving the further earnings gains from here.
All right, Dan, thank you very much. Good to have you with us, and great to have you in the house, Mike.
Yeah, appreciate it. Thanks.
Well, that fear about rates not coming down anytime soon, and also being reflected in the bond market today. Mike talked about this a little bit. Yields moving sharply higher. Rick Santelli is in Chicago to take us more in depth. Hi, Rick. How are you?
Hi, Courtney. Yes, sharply higher. That's a good way to put it. And there's a couple of good reasons. Let's go over them. Here's the good. The ISM manufacturing headline breaks a string of 16 consecutive months under 50 to come up with the best number, 50.3, since SEPA 22. The bad, well, this is prices paid. You'd rather have it go down, but as you see, highest level since July of 22. And finally, the ugly. Listen, this is the employment index. 6 in a row under 50, 11 of the last 14 under 50. That doesn't look like it. If that was a stock chart, you probably wouldn't be looking to buy it. But yet, after having said that, last year, 9 out of 12 months were under 50, and the job market was pretty good. So how much can we really glean from these? And finally, what did it do to the markets? Well, here's 2s, 10s, 30s on one chart, 24-hour chart, 10 o'clock Eastern. You can clearly see these numbers, as Mike Santoli said, fed the sell-off. But the sell-off was already afoot. Why? Because every analyst I read all week and every economist, boy, the numbers were pretty much as expected. I was there at 8:30 Eastern on Friday, and the numbers did not make any progress on inflation. They're the Fed's favorite, and it certainly does demonstrate that there's a definite Rorschach going on when it comes to the Fed still. And Chairman Powell on Friday still underscoring he doesn't really see a problem. And finally, all of these issues with rates, 2's on pace for a 2-week high close, 10's on pace for a 4-month high close. Dollar index, you guessed it, it's solid as a rock. It's been trading above 105. It's on pace for a 4.5-month high close. Courtney, back to you.
Thank you very much, Rick Santelli. Well, coming up, a power call on some footwear stocks. Barclays getting bullish based on some strong survey results. The analyst will join us next. Plus, California raising the minimum wage for fast food workers, a potential hit to some businesses in the state. We'll talk to the co-CEO of one chain that will be affected, Power Lunch. We'll be right back. Welcome back to Power Lunch. As the second quarter is officially underway, Barclays is taking a big step to expand its coverage into the footwear apparel space. Firm out with a note, initiating 4 footwear stocks: Crocs, Skechers, Deckers Outdoor, and On Holding, with each stock receiving an overweight rating. Here with us now is the author of that note, Adrienne Yih. She's Managing Director and Consumer Discretionary Analyst at Barclays. Adrienne, it's wonderful to have you here with us. I guess, you've got 4 stocks here. Let's start with Crocs. Why are you so compelled when you look at a name like Crocs? I think so many of us look at them as a fashion fad that surprisingly has not faded.
Yes. What I'd say about the 4 names that we initiated on, I would say that the footwear space is unique in that it allows for a lot of white space. So if you have a compelling brand and you have loyalty across, for different income brackets and different demographics, you can actually continue to succeed. I think what we like about Crocs is they command, literally the highest product margins as one can imagine, right? 70% versus the sector sort of 50-60%. And then in terms of operating margins, once they get that leverage on the model, they are printing, north of 25% operating margins, which is far and away like 1,000 basis points, 10 points above others.
Yeah, and when it comes to some of these names, obviously they operate in slightly different subsectors, but obviously Nike has been just this mega brand for so many years. We know they had their individual stumbles. Are any of these names also partial beneficiaries of Nike sort of working out its own problems?
So you hit the nail on the head. If we look at the horizon from 2016 to 2022, globally, Nike and as well as Adidas have given up, 4% from Nike and about 3.5% from Adidas. And so that opened up a ton of oxygen in the room for these nascent brands, like a Hoka and like an On Running, as well as a bunch of other running specialty, sneaker brands. And so what we've heard from Nike, self-admittedly, is that they really didn't do a good job in closing the door over the past 2 to 3 years and blocking out some of these innovative competitors. And I think we also heard on the last call from Nike that it's going to take some time for them to retrench, right? So they're doing franchise management and they're going to hold back on selling, certain of their products into the market. Again, it takes about 15 months to 2 years to build this innovation pipeline back, and it's going to leave some room for Hoka and for On.
I wonder, I think of these brands, and I mean this in a non-pejorative way, whether it's Hoka or whether it's Crocs or whether it's Uggs or even Skechers, maybe even On, as niche-y. They're a little fun, they're niche-y. And maybe their future is in not trying to take on Nike, because who can? Am I barking up the right tree there that if they play their niche really well, if their niche can mean rich?
Yeah. So Carla, I think you are spot on with the notion that each of these has a technology, a loyal following, a brand differentiator that at their side, right, can last them for years on the come. We like to think about kind of these brands as the S-curve of adoption, and we always like these brands are their best and strongest when they go from late early adoption to early mass adoption. That runway that has low brand awareness and high brand desirability can propel these brands for years. And we used to see this kind of back in the early 2000s, where you would see 3, 5, 7-year runs on these great brands. So I think you are absolutely correct. These guys need to stick to their technology and kind of play their own game in an area where they're still the smaller competitors, and they could double in size pretty easily with, not a lot of, harm, in terms of kind of taking a ton of share from the incumbents.
Adrienne, I continue to be fascinated by the idea of balancing direct-to-consumer with wholesale. When you're a new brand, wholesale can be very valuable because it sort of offers marketing opportunities. If a consumer goes in thinking they want Nike, but then, oh my gosh, they see a new shoe from On Holdings and maybe they want to try that out, that's valuable. But in your notes, you're talking about growth opportunities through the direct-to-consumer channel. Nike is just now sort of saying, yes, we want direct-to-consumer, but maybe we do need to refocus on this wholesale relationship. So where is the opportunity? How do you find that balance if you're one of these niche brands? Do you go direct to consumer? Do you go wholesale? How do you find the balance?
So when you are low brand awareness, the greatest propellant of brand awareness is to go wholesale. It's the fastest, and that's how you become discovered. So in our analysis, we did a proprietary survey, and the aided brand awareness for On is 8%, and the aided brand awareness for Hoka in the U.S. among our survey participants was 22%, compared to Nike at 95%, right? So in order to get known and recognized among the consumer landscape, the fastest way is to go through a wholesaler like a Dick's Sporting Goods or a Foot Locker. So you're put side by side for trial next to Nike, next to Adidas, next to Puma, right? And that's the greatest thing. Having said that, once you get to this notion of I am aware, people are aware of the product, then you want to take back control, right, of the branding, the promotionality, how the brand is positioned, the innovation pipeline, and you don't have as much of that control in the wholesale channel as you do in the direct-to-consumer. So if you want to control the message, right, there's a very fine balance between going DTC and wholesale in tandem. And it's a very fine line, and people kind of straddle it right now. But I would say, in the early stages, wholesale's away.
Quick answer, if I might. With the exception of Skechers, which has an endorser in Howie Long and maybe a couple of others, I think of these companies as going low on advertising and endorsements compared with an Adidas and even an Under Armour or a Nike. Am I right on that? And how have they done it in the absence of a big advertising budget and endorsements?
So it's interesting because there's a bucket that's called demand creation, which we would know as advertising and promotion. Within that bucket of demand creation are personality endorsements. And I would say that each of the running brands, for sure, sort of has the personalities, particularly in the running segment. So it's possible that you may just not recognize them as well as, say, the Skechers spokesperson, Howie. So, to the extent that these companies are investing anywhere between 7% up to 10 or 11% of their P&L, that's kind of, status quo.
Okay. Adrienne, thank you. Thank you very much. Adrienne Yee, appreciate it. All right, still to come. It has been 1 year since the boycott that hit Bud, and Bud Light specifically. So where does the stock stand now, and how does it approach branding? Boom. That's next. I don't know whether you heard that, but we did. Welcome back to Power Lunch, everybody. Shares of AB InBev still haven't fully recovered following a controversy which began last April following its partnership with a transgender influencer. Brandon Gomez joins us now with more on an eventful year for the company. Brandon?
It's definitely been eventful, and the road to recovery for Bud Light definitely still continues. Reported sales being down as much as 28% in the months following that partnership. Nielsen data at the time showed Bud Light lost its #1 spot in U.S. beer to Constellation Brands Modelo. Consumers also turned to Molson Coors. And look at shares of some of those companies, right? AB InBev still down about 8% since that time. Constellation, Molson up 20 and 30% respectively. respectively. Now, Bud Light was able to stabilize its decline by fall, investing in some strategic brand partnerships. Even former President Trump posted on Truth Social back in February of this year to give the company a, quote, second chance. But Bud Light still hasn't been able to fully recover. The latest Nielsen data shows that market share remains down 4.8% compared to pre-boycott levels. The company spokesperson talked to me over the weekend, said that Bud Light remains the #1 beer in volume sales year to date, is improving in off-premise, and that the company has been, quote, on a positive market share trajectory over the last 7 months. So the question remains, is the stock a buy? Well, Bernstein in a recent note says the company's recovery appears to have stalled for now, emphasis on the for now, but they do maintain a buy rating, citing the company's broader portfolio. Last quarter, it saw profits rise despite the boycott. So, Tyler, it's been a long year for Bud Light as a brand, but perhaps there's some light at the end of the tunnel for Anheuser-Busch as a broader.
I guess the simple question is, have people forgotten what got them into hot water in the first place?
I don't know that it's a forgotten case, right? I think that Bud Light and specifically Anheuser-Busch has been strategic about their partnerships moving forward, right? Their core consumer demographic felt alienated because of the decision by what the company made, by what the company decision. But then now they're investing in country music stars, partnering with them. They now have a partnership with the UFC. They now have a partnership with the Olympics. So I feel like they're trying to develop more and more partnerships that are more in line with what their core consumer demographic was pre-controversy in order to sort of pull them back.
I wonder if some of those investments ring a little hollow with the core constituents who go, oh, you got in trouble there. So now you're coming back into a more mainstream group of endorsers.
And you see with that post from Trump on Truth Social saying, you know, let's give them a second chance. Even if that kind of an endorsement isn't enough to get that core demographic back to the brand, what's it going to take?
Again, this fascinates me, and I know we're sort of out of time, but can we really attribute all of the sales decline to this incident?
No, I mean, it was happening before the boycott incident happened, right? That market share shift to Modelo was already happening. This may be a catalyst that expedited the process, but, you know, you can talk about even more broader consumer trends where folks are turning away from beer, going into ready-to-drink cocktails within the space. So can it all be attributed to this one moment? No, not necessarily. But it definitely was a catalyst that sort of pushed the needle in one direction.
Compare Modelo. I watch a lot of sports. I know you do too, especially this time of year with basketball. Modelo's advertising is very effective. It stands out. I mean, I can't even put my finger on the theme, but they're sort of vignettes of people who are artists or barbers or entrepreneurs.
I can hear the music, actually.
Yeah, it's very effective and catchy. So, I mean, I guess they've done very well at that. We appreciate it. Thanks very much.
Thank
you. Thanks.
Let's get over to Leslie Picker. She has our CNBC News update this hour. Hi, Les.
Hey, Courtney. The White House said this afternoon it is aware of reports of an Israeli airstrike on the Iranian consulate in Damascus. The spokesperson says the president has a team looking into the claims. Meanwhile, Iranian officials said on state media channels the country reserves the right to take reciprocal actions against Israel. A top Revolutionary Guards commander and several diplomats are among those reported dead. An expert panel appointed by the FAA said today the agency should stop requiring pilots to disclose if they're in talk therapy. The panel said the current rules lead to healthcare avoidance or non-disclosure and create barriers to reporting mental health issues. The FAA says it is reviewing the recommendations. And U.S. traffic deaths likely fell about 3.5% in 2023, even as people spent more time behind the wheel. But even with the progress, the statistic is still higher than it was pre-pandemic. Federal highway safety regulators are urging people to put down those phones and avoid other distractions while driving. Courtney, back to you.
That is very good advice, something I often harp on people about. Thank you, Leslie. Well, California's minimum wage hike beginning today. Workers using it as a backdoor to organize without forming a union. Multiple public chains will need to comply, but after the break, we'll talk to the co-CEO of Raising Cane's, a private fast food chain which is planning to open 20 new California locations this year. Power Lunch will be right back with that and more. A new minimum wage going into effect in California for fast food workers, $20 an hour. But with money in politics, things are never quite that simple, are they? Kate Rogers joining us now to explain exactly who is covered by this and who isn't. Hi, Kate.
Hey there, Court. The minimum will be among the highest in the nation and the sector's highest as of today, with ripple effects sure to be felt for all parties involved in varying ways. Now, right now, Glassdoor data show that just over 20% of California fast food workers are making $20 an hour, so many more will get a pay raise. The law targets fast food chains with 60-plus locations nationwide and impacts here more than 500,000 workers in the sector, Governor Newsom said in the fall. Now, there are exemptions for bakeries who make bread on site, restaurants and airports, museums, hotels, and event centers. The SEIU president, Mary Kay Henry, told CNBC the focus was on fast food because workers were inspired to take action in the wake of the pandemic. It's among the most meaningful developments since Fight for 15 began a decade ago.
It's taken us 10 years to get to this table. And they feel like they're going to have a voice on the job that they've never been able to experience before.
Now, business advocates say this will have both ripple effects and unintended consequences for workers and businesses alike. The IFA president saying, quote, these are small businesses and they're facing now mandated higher costs, and those costs are going to get passed on to the customer and will likely result in fewer jobs. That's Matt Holler, the president and CEO of the International Franchise Association, and that group was involved in these negotiations as well. So a lot of back and forth here on how this will play out, Courtney, and certainly will be something to watch over the next year.
There are so many questions I have for you, Kate, but obviously California is a big state. There's a lot of companies there, a lot of fast food companies. Are there any publicly traded chains that are being affected that you've been able to identify yet? I know sometimes the pay data isn't always super transparent. I think you said 20% are already making this wage, but 80% that means are not.
That's right. So, Courtney, if you think about companies that have a large footprint here, McDonald's, of course, Chipotle, Yum Brands, there's Jack in the Box, there's Starbucks, and it kind of depends also, keep in mind here, on how these chains are operated. So Starbucks, for example, those are company-owned locations. They'll have to comply, but the company sets the prices there. Chipotle, same thing, company-owned. McDonald's, though, those are run by franchisees. So franchisees wind up deciding how much they're going to raise prices, but it all could wind up impacting these larger companies as well, because if consumers do indeed pull back, as some are projecting, then that will wind up hitting the bottom lines of some of these companies. But on the other hand, the SEIU says low-wage workers will have more money to spend. And we know a key theme this earnings season and beyond has been the low-income consumer pulling back. So does this wind up, boosting business for some of these companies that have experienced that? And it's kind of too soon to tell. We look to Seattle for an example. They raised to 15 years ago, and that was a big to-do there. And there's data to support both of those arguments. So we will be watching this one to see how it plays out.
All right, Kate, thank you very much. Raising Cane's is among the many restaurants being impacted by the minimum wage hike today in California. The Chicken Finger chain has currently 87 locations across California, plans on opening an additional 20 this year. For more here, let's bring in Raising Cane's co-CEO and Chief Operating Officer, AJ Kumara. AJ, welcome. Good to have you with us.
Thank you. Good to be here.
What is this wage hike going to mean to you, and what's it going to mean to the prices that customers might have to pay?
Look, honestly, we have always been about the minimum wage. We believe in doing the right thing by our crew members, having a great place to work, when that comes to benefits, wages, and all of that. So although this is 16 to 20 in minimum wage, we are not there. We are far above that.
You're above 20?
No, sir. Above the 16, which is minimum today.
You're above 16?
Correct. So
but you have to now go to 20.
We have to go now 20, and honestly, we have to go above that, because what we don't want to do is we don't want to compromise on the quality of training that we provide, the benefits that comes with it, the quality of food that we serve, any of it, which means that our average is now going to be closer to $22 or $23. And honestly,
so that you can retain the workers,
absolutely,
and you won't have exact parity with the others who are coming
absolutely,
to 20. You will keep that edge.
Right. The crew members who worked hard to train themselves on additional jobs and things like that, they've earned that gap versus the other crew members, and we want to continue giving that. So it'll be about $22, $23. And honestly, we're happy that we can give this to our crew members. We're always happy when we can provide them better pay, better benefits, and all of that. Unfortunately, though, we run on razor-thin margins. You alluded to 20 restaurants. We actually have 50 more restaurants in the next 24 months or so that we have to open. We want to create those opportunities for our crew members, the new ones joining and all of that. That means taking price, so we will be taking a small price increase, somewhere around 7%. And that is in the hunt of what I'm hearing all the other companies are doing as well.
Is that just in California or across the chain?
No, that will be isolated to California.
Okay.
We, honestly, taking price gives me a, knot in my stomach. I really don't like doing it. We want to provide a great value to our customers day in, day out. So it's not our choice, but to protect the margins, not even all the way through, at least the most of it, so we can continue growing. We're a company-owned system. We're the fastest growing company-owned system out there, one of the anyways. So we'll be taking prices just in California.
60, am I right? 60-some consecutive quarters of same-store sales growth?
Yes, sir. More than 15 years of consecutive same-store restaurant sales growth. That's what we maintained.
Wow. What about if your workers are making more money and then others are as well in California? Do you anticipate any kind of sales potential benefit from people having more disposable income to buy more chicken fingers?
We have always tried to stay consistent, do one thing better than everyone else. So we focus on what I call everyday value. So we don't do limited time offers. We do 5 things. It's chicken fingers, fries, toast, sauce, and a coleslaw. That's what we serve, and we do that really, really well. So our customers come to us for everyday value, and they're pretty regular, they're very loyal. And we are very transparent with the way we price, the way we serve our customers, crew members, and all of it. So I do not anticipate any kind of decline in customer traffic, because if they're eating, they're going to find us as a great value. Now, would there be an increase in that? I don't know. I think the better players will rise up to the top.
Probably what food? Looking at right here. So a lot of fast food restaurants, I assume, are trying to cut staff. They are automating. They're using artificial intelligence. They're using kiosks for ordering. Are you doing that, or are you maintaining your store-by-store headcount, or maybe even increasing it?
We're not. We actually have some of the largest number of crew members per restaurant. We have over.
That's what I thought. That was my sense. Was you have a lot of people.
Exactly. We have over 10,000 crew members in California, spread over 90 restaurants, a little over 100 a restaurant. And the reason is we also want them to have a great workplace. So we don't like to have them working long hours when there is trying, etc. So no, we're not automating. We're not changing our benefit plans. A lot of people are doing that. We're not changing anything that we do with our food. None of that. We're going to stay our path. We really like the product that we're serving, our service model, and a smiling crew member who serves you. So we're not going to change any of it. We're going to stay our path.
Wow, fast food service and food service in general is a tough job. So that's good. I'm glad you're thinking about the employees and the long hours. It's tough.
Absolutely.
Hiring, hard work. Thank you so much for joining us. Appreciate it.
Thank you very much.
Keep us updated how it goes. I'm going to be very interested to see if you actually end up with more sales from individuals that end up having more disposable.
Let's hope so.
Let's hope so. Thank you very much. Well, still ahead, powering AI, the unlikely source. It's helping fuel the massive energy needed for artificial intelligence projects. We're going to discuss that and more when Power Lunch returns. We'll be right back. NASDAQ 100 is up 67% since the beginning of last year as this AI craze boosted stocks such as NVIDIA. But if you think the run is done in chip names, maybe there's an opportunity in energy names, which will be needed to meet AI's huge power demands. Pippa Stevens is here with more on the ripple effects. Okay, where's the opportunity?
Well, Courtney, a whole lot of power is needed. Data centers' electricity demand could more than double in the next 2 years, according to the IEA. That means data centers would consume as much power as all of Japan. And renewable production just can't keep up with that kind of growth, meaning that gas demand could also rise, boosting drillers like EQT, Coterra, and Range Resources. But after you get the gas out of the ground, you've also got to move it. So think pipelines. It's hard to build a pipeline quickly, especially an interstate one. So companies with pipes already in the ground could have added value. Equitrans, recently bought by EQT, Enbridge, Kinder Morgan, and Williams are names to watch. And then you'll need to keep your data center up and running 24/7, so companies that make generators, cooling equipment, and other control systems could be winners. That's where names like Eaton, Wesco, and Atcore come in, as well as Johnson Controls and Trane Technologies for cooling equipment. RBC called the group a, quote, often overlooked piece of data center operations, noting there's been a meaningful uptick in multi-industry companies mentioning data centers on earnings calls. And of course, everyone wants to get in on the momentum behind this trade, but there really is a big power story here.
Absolutely. I mean, you need so much power to do everything you need to be able to do with all of this stuff, crypto as well as AI. Every iteration worries me, actually, that we're going to have enough and be able to support this with.
All right, Pippa, thank you very much. Pippa Stevens. Coming up, the Comeback Kids. CNBC Pro highlighting some underperforming stocks that Wall Street says are poised to rally. We'll get our traders' take on a few of them in Free Stock Lunch when we return. All right, time for today's three-stock lunch. Stocks are off to a hot start this year. Maybe not so much today, but there is always something lagging the market. CNBC's Pro screened for stocks that could be due for a turnaround. We're taking a look today at 3 of them that are down this year but have room to the analysts' average target. Room to rise, that is. Here with our trades is CNBC contributor Courtney Garcia, Senior Wealth Advisor with Payne Capital Management. Up first, Courtney, Match Group shares down 1% so far this year. Your trade on Match. Should we strike a match?
We do, yes. I would be a buyer of Match here. I don't really think our online dating is going away anytime in the near future here. They have some really popular platforms, Tinder being their main one, which has really been the reason largely that the shares have been under pressure, as they had some increase of prices, which meant less users for Tinder. But now you're seeing growing revenue and popularity in Hinge, which is their second largest platform. And that's not just growing here in the US. They're actually starting to push into European markets, let alone when you look at Asia, that is in a hugely untapped growth over there. When you just look at the demographics, there's just such an addressable market there that hasn't yet been tapped into. And I think that's really going to be their longer term growth story, is when you look not just here in the US, but abroad. And it trades an attractive valuation. Over the last 5 years, it's averaged about 28 times forward earnings. It's currently only trading about 12 times earnings. So I think for all those reasons, I would swipe right on Match.
There you go. Exactly. I was going to say that, but I can't remember if it's right or left or what the right way is. Anyways, up next, Courtney, let's talk about Caesars. Shares down 6% for the year, but the average price target suggests a nearly 37% rally. Of course, the sell-side analysts are correct. So what's your take on this one, Caesars?
I'd actually stay on the sidelines of Caesars. I do actually like a lot of casino operators, but when you're looking at gaming demand, a lot of that is much more abroad than it is here in the US. So specifically Macau and Singapore is, I think, where a lot of that growth potential is going to be. And some of your other casino operators do have that exposures. Caesars doesn't. And they also did have a recent merger with El Dorado, which I think longer term is going to be a benefit for them. But what happened is they had to take on a lot of debt for that. So although they do have good operating margins, a majority of that is going just to pay off of interest payments, which is likely to continue to weigh on their shares for a little while here. So I would stay on the sidelines for those reasons.
All right, Courtney Garcia, let's go to the last one of the day, and that is United Health, UNH.
United Health, I would be a buyer on here. This also has been under pressure this year, like the other 3. Most recently, they did have that cyber attack, which put pressure not only on them, but the entire healthcare sector, which hopefully they're starting to get under wraps here. And I don't want to discount the fact that that is going to be a short-term issue here, because we have no idea how that's going to affect their margins here in 2024. They've already had to pay out, I think, over $3 billion to service providers who were affected. But longer term and bigger picture, they are the biggest Medicare Advantage provider. And as you're looking at demographics here in the United States, you have over 10,000 baby boomers every day hitting age 65. That is going to continue to benefit them. And their shares traded about 17 times forward earnings, which is still lower than their historical averages. So for all those reasons, I would hang in here for the long term.
Court, thank you very much. Courtney Garcia, we appreciate it. And for more on stocks that are expected to make a comeback, why don't you go over to cnbc.com/pro-pick. That's where you'll find it.
Well, coming up, the impact of Clarkonomics. Caitlin Clark and the Iowa Hawkeyes set to take on LSU tonight in a rematch of last year's NCAA championship and what could be the basketball star's last college game. We'll break down the impact she's had on and off the court when Powerless returns.
begins here.
There are two women's college basketball games tonight, one in Portland, Oregon, and one in Albany, New York. In Portland, you can get a nosebleed seat for about $10 on secondary ticket sites. In Albany, even the worst seats are going for $125, not including fees. That's because Caitlin Clark and Iowa are taking on LSU in a rematch of last year's title game. And that's just a small example of the economic impact Caitlin Clark is having. Here with more is Jeff Ullman. He's business analytics professor at the University of Iowa. Two of my sisters-in-law went there. We are very excited about Caitlin Clark and everything that she's done. It's been really fun to watch athleticism and skill at that level. What, in your estimation, has she brought to Iowa and or the university because of all of the attention that she's gotten for, frankly, her skill as a women's basketball player? I mean, what's the value of her?
Well, I focused on two basic measures, and that's just attendance and the ticket price. And if you just look at those two things and ignore even merchandise sales, spending on restaurants and concessions and lodging, you're already at an unbelievable number. For instance, if you look before Caitlin, attendance was around 5,000. Since Caitlin, she's sold out every game this year, so that's an increase of about 10,000 tickets per game. The average ticket price has gone up, say roughly $100. So that right there is looking at $1 million per game. And so if you take that times 14 home games, that's $14 million. And that's not even considering anything else.
Can you put a number, a guesstimate on the total economic impact of Caitlin Clark, the Clark effect?
Oh, I don't think you can actually I couldn't put a number on that I would even be comfortable with on the scale. I mean, I've seen other studies that are somewhere between 14 million and 52 million, and I would even say that's probably underestimating it, because when it's all said and done, I think, you know, after the lag and you get to macroeconomic data, it wouldn't surprise me if an estimate might be even close to 100 million.
I guess there was a report released by the Common Sense Institute Iowa, and they are saying Clarkonomics has generated more than $82 million in increased community and state consumer spending. If you are the University of Iowa, obviously you are an employee there, how do you continue to capitalize on the Caitlin Clark effect if this does end up being her last game as a college athlete for the university? I mean, can the team continue sort of this intrigue with the broader country going forward?
Well, yeah, Caitlin's going to move on to WNBA, and I think she'll do great things there. But Iowa will always be part of Caitlin, and so just because she'll move on, I don't think you're going to see a drop off in the attention that women's basketball and women's sports in general at Iowa get. Iowa has a long-standing tradition of supporting women's athletics. We might not be the Caitlin Clark craze, but I think you'll see appreciation of the great women athletes we have here.
Very quickly, Iowa, the university, the state have done well. Women's basketball has done well from the Clark effect. How has Caitlin herself done? How much money has she made through NILs or other means?
Well, interestingly enough, she hasn't made any money from the, there's mentioned how there's no money coming from the university collective, but she has definitely garnered millions of dollars from private deals with, as you're showing, Gatorade and Nike and so forth.
And those deals will only multiply, one can assume, when she is almost certainly to be the first pick in the WNBA draft later this month. Jeff Ullman, thank you very much, and, well, good luck to Iowa tonight.
Yeah, go Hawkeyes. I'm going to say it. Can't believe it, but for my family, go Hawkeyes.
Well, that was interesting. Yeah, I'll be watching tonight.
Absolutely.
It will be a very interesting game to watch.
Very compelling to watch and awesome for women's
playing
sports.
the defending champs, who are very good.
Very good.
Very tough. Thanks for watching Power Lunch, everybody.
Closing bell starts right now.
All right, guys, thanks so much. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make or break hour begins with the rally and the risks to your money as a new quarter begins. Earnings season soon to heat up, and that will likely hold the cards for stocks in the near term. We're going to ask our experts over this final stretch whether they'll live up to the hype. In the meantime, take a look at your scorecard with 60 minutes to go in regulation. Some pretty good economic data this morning. Well, that sent yields higher, pushed stocks down. That's where they are right now. There's the 10-year, 433. The Nasdaq's been trying to make a move all day as Microsoft, Meta, and Alphabet rise. Elsewhere, really only energy doing anything as last month's best trade looks for more momentum in the quarter ahead. It does take us to our talk of the tape, whether a historically good month will play out that way for investors. Let's ask Adam Parker. He's the founder and CEO of Trivariate Research, a CNBC contributor, with me once again at Post 9. It's good to see you.
Always good to be here.
All right, so new quarter, same story for the rally. What do you think?
You know, we look back, our data goes back to 1928 in our database, and there's been 12 times previously we had double-digit returns for the S&P in 2 straight quarters. You know, we were up 11 and change in Q4, we're up 10 and a little bit in Q1. So I said, all right, well, what happened the quarter after that? And if you look back, the averages, it worked another 4% on average, and only one time were you down double digits, Q3 1975. So the data, it's not a massively statistically significant sample size.
Yeah, it's
but
not
the data,
an exact science or anything, but the trend is your friend. I mean, momentum means something.
It's up. 9 out of 12 times it was up. Only one time was it bad out of the previous 12 years. So history doesn't say, oh, I had 2 great quarters, let me, throw everything out. So I'd say that, the trend's your friend. And I think this week's big. If we get any negative pre-releases, I don't think we're going to, but that's something you got to monitor. Usually everyone dots their I's, cross their T's, and maybe Wednesday or Thursday at 4 p.m. you get a little, revenue guide down. That's what we have to watch out for, but I don't think that's, what's highest probability.
So how are you thinking about rates and stocks? Because, you had the better data this morning, and the 10-year goes to 433, and stocks are a little uneasy. I mean, isn't there a point at which stocks don't want to handle the backup in rates once again? We don't want to be talking about that again, do we?
Man, it's like I want to change my mind on that every day. I want to say good news is good, bad news is bad. If the economy's good, the 10-year backs up a little, the stock market goes up, corporate earnings are good. That's how you learn it in the textbook. It's only the last 13 years we've all been messed up by Fed intervention that we think it only can be good when rates go down, right? And today it's interesting. The market's, not having a great day, but tech, which you would think is more rate sensitive, is fine. So I think you can handle higher rates as long as I think the economy's decent. But I don't know what the magic cutoff is, if it's, 5 or something like that. But today surprised me a little bit. I think, good news should be good.
You've called the broadening pretty incredible, right, that we've seen in the market. It's been extraordinary, really, that, finally all these other areas beyond tech over the last month, let's say the month of March, tech was like 6th or 7th in performance. Does that continue?
I think if you're bullish, it will. If the market goes up, it will. I don't think, that small caps outperform in a down tape. So to me, the reason things are good is financial conditions are very easy. If you look at any sort of standard financial conditions index, this is about as good as it gets. It's in the top 5% of easiness. So the small caps shouldn't have problems accessing capital. Their margins can go up, and that's why it's broadened. If you get tighter financial conditions, if the economy slows, then I think you narrow back to the ones you're confident in the growth trajectory.
I mean, I heard somebody use the word Goldilocks earlier, right? Economy's strong. We know the Fed's going to cut at some point. Earnings are probably going to be, decent. Would you use that word?
Yeah, decent. I think that's right. I mean, look.
I mean, Goldilocks.
Well, yeah. I mean, you had 2 double-digit return quarters. The Fed is, saying they're going to be accommodative. Margins are going up. Financial conditions are easy. I think you got to dance when the music's on. I think the question is, does the Fed somehow, really get people thinking look, the worst thing is you start being afraid we have stagflation later this year. You get a little bit of pickup in inflation, economy slows, and then that's where you get the, double-digit correction in that month. Right now, that doesn't look like something you should position for, and I think there's lots of portfolio strategy, right? You can own AI, you can own accelerating software, you can own electrification industrials, you can own energy and copper. Like, there's things that I can own healthcare services for cost cutting. Okay. I see lots of things I want to own, and so that keeps me constructive.
All right, let's talk positioning. You just used that word, so let's go there. Because you have some new positioning calls in terms of what you've done in various sector weights and what you've increased and decreased. So you reduced your weights in healthcare, utilities, staples, so that you've reduced defensive plays, obviously, real estate and discretionary by 1%. You've increased exposure to tech. You've increased exposure to materials, financials, industrials. So you're definitely getting more cyclical.
Yeah, look, our tech, when your S&P benchmark, you own twice as much tech as anything else, right? So if you like AI semis, we talked about for over a year, you like accelerating software, you're going to own a lot of tech. You own a lot of mag tech. So the question is, how do you balance that? I think energy materials are a good balance. I think financials, we have a market weight, but I didn't want to be underweight. I think that they're pretty good risk reward, a lot of shareholder return. I'm not exactly sure what interest rate environment I'm rooting for. That's the only thing that worries me. But if the economy is good, and that's what the stock market for the last 2 quarters is telling you it's going to be, banks tend to do okay. So
a lot of them have already done okay.
They've done okay off the lows of October 7th. That's right. Yeah, and I think they're still pretty cheap. I mean, there's plenty of banks I can buy at 10 times earnings.
But the problem is a lot of these banks, the bank stocks of JP Morgan and some others, are already at new highs.
Yeah,
that doesn't make you nervous at all going into earnings season?
Maybe, but there's stuff like Truist or other things that have 5.5% dividend, don't have pretty good, geographic footprints, don't have CRE exposure.
Like super regionals.
Yeah, I think there's some of those that are pretty good. And, look, when the stock market is at an all-time high, then it stands to reason a lot of stocks are going to be at an all-time high.
So you increase your exposure, as I said, to tech by 2%.
Yeah.
Now, you had already been advocating that you got to be overweight tech. So, I mean, we're talking, 25 to 30% of exposure in someone's portfolio to tech, and you're sort of even.
Yeah, we're at 28 now. That. Yeah, we're at 28 now. We went from 26 to 28 in the recommendations. I just think there's multi-year trends we're in the early phases of. I want to own software that has accelerating revenue. I want to own semiconductors with expanding gross margins. I want to own market weight in the Mag 7, some of which are in tech, some are in comm services. But when you add that all up, you're going to have a quarter plus of your portfolio in those names. So how do you diversify? You got to own a little healthcare. You got to own some cyclical stuff like energy and metals, which we see is a little bit diversifying today, which is, I think, a positive for the portfolio construction. The thing I'm most negative on at the current moment, based on what's worth, the thing I'm least likely to want to chase is physical U.S. retailers. Okay, when I look at the components of the XRT, I see tons of stocks that are up a lot. I don't know if Abercrombie and Fitch is an AI stock all of a sudden, but last I checked, they sell, clothing. Target, something I think is overvalued. I can't find any stocks in my database that have lower margins, grow more slowly, and are more expensive.
Would you short? You would short some of those names?
Yes, I would. I think that this is, the least believable, sustainable part of the growth story. I'm willing to believe we need more compute with AI. I'm willing to need more industrials with electrification. I know we need more housing. Like, there's things, I know healthcare companies can be much more profitable in terms of their, productivity. Like, there's things I can dream they might happen 6 months from now, they happen in 5 years. What's the dream? I'm going to sell more stuff at Target?
So how would you play the consumer, which has been pretty strong? Would you do it through experiential and travel type things, or you wouldn't play it at all?
I think you have to be underweight. That's our biggest underweight in portfolio is discretionary. Sure, high-end travel holds in because, the upper 10% are inelastic to hotel pricing and the like. You haven't seen great data out of, the booking companies over the last couple of quarters, so cruises, et cetera. So some of that is slowing a little bit in the middle end, but I don't think you want to own Target or Ulta or, Dick's or the things that sell things in physical boxes.
Hasn't Target already gone through these trials and tribulations? The stock's really reversed.
It's up 60% from October 7th.
I know, but look how far it fell.
And I look at it now and I think, so I'm paying 19 times $9, which you guided to. $9 embeds some mean reversion of margin and growth. What am I looking at? I comp negatively in the store, I comp negatively online, and I don't add new boxes. That sounds to me like every hedge fund guy I talk to says, I short melting ice cubes. You got a giant one in front of you. It's overvalued because everything worked. Why did it work? When people think the Fed's going to cut, the playbook says buy discretionary, right? So the multiples expanded 4 turns in that sector so far this year, and I don't see any fundamental fall through. With the other things we talked about, housing, electrification, industrial semis, I've seen some fall through. I can believe
you wouldn't buy a Costco?
Costco might be a little different, harder to steal from them. Employees get paid more, they don't steal as much themselves. A little bit harder to resell on Amazon. 50% of the operating profit comes from the annual fee. So obviously there's some little nuance differences, but I think the poster child would be like a TGT.
All right, let's bring in CNBC contributor Shannon Saccocia now, NB Private Wealth. Hey, Shannon, it's good to see you. Glad to have you on today. So we have a new quarter. What's your view?
Well, Adam said a lot of great things there, but I think there's a couple of things that I really want to drive home as we go into this next quarter. Clearly, we've seen a little bit of weakness here, Scott, more recently in that momentum factor. And I think that's an important sign for people that are looking for the continuation of the rotation. Momentum was really leading the trade when it was technology and communication services. So it's really opening up the avenues to some of this diversification, some of this dispersion, if you will, in the underlying sectors.
I think the other thing to remember is that as we're going forward, you talked about rates earlier. You know, rates as a sort of a near-term transitory mover of stocks, that's one thing. Expectations, to your point about the Fed pivoting, is another. Our view is that that's not going to happen, and so some of this incremental move, if you will, in rates may offer some opportunities both on the equity and the fixed income side, frankly, to manipulate your positioning. But I think more importantly, this is really about the potential for the reacceleration of inflation. I think growth has a foundation here. We looked at the economic data that's come out over the last couple of days. It seems like the growth story is intact. So the question's now going to be for sort of macro thinkers, does this lend itself to a reacceleration of inflation? Perhaps in the short term, but it's likely transitory.
But I feel like you guys would disagree on positioning in terms of when you're watching the momentum trade. We're speaking about tech and some of these growthier names. Here's Adam increasing his exposure to an already bullish stance, right? He takes it up from 26 to 28. And I almost hear you suggesting that you would take your exposure to that area down. Is that right?
Well, thematically, Adam's not wrong. On a longer-term basis, there clearly are drivers for that. And I think, you know, from our perspective, there's opportunities outside of kind of mega cap technology to be able to take advantage of the productivity enhancement, to be able to catch this theme, if you will. I think more importantly, Scott, it's less about how you feel about the technology sector, whether you're neutral or slightly underweight or slightly overweight. It's really about how you're positioning within that sector. There are clearly some winners and losers this year, even in those top names. And so being able to position for that, but also allowing you the capital to potentially get some insulation in a more volatile rate environment, but also to pick up some growth in other sectors. The economic picture is allowing you that right now, Scott. It's allowing you to see names like materials, for instance, that are trending quite strongly as we enter into the second quarter.
Yeah, but she's also looking for, as you clearly hear, you know, her talk about the idea that, you know, rates are going to be a little sticky, that inflation is at risk of, you know, reigniting or at least just remaining where we are, which would be problematic in some respects, right? The Fed is kind of banking on this number getting down to target.
Yeah, I don't see, first of all, I of the people that I go on with, Shannon is one of my favorites because she usually makes total sense to me, and if I disagree, I understand why.
Does she make sense?
And she makes sense to me here again, in that I think the debate is just, we have growth now. Does the growth turn into the stagflation period I briefly mentioned? If it does, then I think we would agree we're going to get a sell-off. At the moment, I still think the growth and economic data is in the lead, but if we start getting worried about, I guess, as you put it, a non-transient increase in inflation, and you know, the Fed says, wow, forget accommodation, we might hike it up a couple times, then I think we all agree.
Well, I mean, all bets are off. If
but
they
for now, the growth's in the
word,
yeah, it's a
forget it.
Right. But I think for now, the growth's in the lead, and that's why. Look, I think what I focus on every day, can gross margins to the average stock expand? If they can, and I still dream of accommodation someday, that is the Goldilocks you talked about earlier. Margins are going up, and I dream of the accommodation.
Shannon, yes, in just a sec. I don't want to say entire, but I'd say 90% of your bullish case of what you've articulated to me here, appearance after appearance after appearance, margins.
Yeah.
You think that margins are going to tell the story this earnings season?
I think if margins go down, stocks go down, and if they go up, they go up. And if I can dream I have accommodation plus margin expansion, that's why we're up double digits the last couple of quarters.
Shan?
And I don't actually disagree with that. I think margins are critical, but Scott, the challenge is here is that there's a lot of opportunity outside of mega cap tech for margins to improve and earnings to re-accelerate. Earnings may still be strong for mega cap tech, but that's going to decelerate potentially over the next couple of years. So if I'm looking at some place where we're going to see margin expansion or multiple expansion, multiple expansion will come outside of those names. And that's why I think this diversification, sectors like healthcare, I mean, we talked about this earlier, healthcare, industrials, financials, you talked about banks. There are opportunities for multiples to expand, and there's less vulnerability outside of mega cap tech. I don't disagree that those earnings can continue to be strong, but they don't have to, they're not going to be accelerating as broadly as they are in other sectors.
Yeah, just but you just took your exposure to healthcare down.
Yeah, but we went from very overweight to a little bit less overweight. But it's our, one of our energy and healthcare are our two biggest overweights. So it's more, I just thought we were a little out over our skis with how big overweight we are. But I agree with her there. Probably.
Where is energy on your list now? Which was the best performer in March?
Yeah, we're overweight. We have been and remain overweight energy and healthcare. I still really like energy. If you have any investors who aren't worried about this month, but are looking out sort of 12 months, 18, 24, I can't see why they wouldn't be massively overweight energy. We do not have enough, supply to meet what's a certainty of demand. And I like that it's got low correlation to the AI trade and other stuff, so I'm going to be hedged on the days where some of the tech stuff acts bad and energy is great, and the portfolio recommendations can still do the S&P. I mean, the goal for us, and I think Shannon's the same, is you want to have a portfolio that outperforms in an uptake and in a downtake. You can't just be, pedal to the metal with one sector. So, we're 28% tech and 7% energy, and we're more overweight energy than we are tech. I mean, that's just how the S&P is constructed.
Shannon, last word to you.
Yeah, I mean, listen, we're right before earnings season, Scott, so the next couple of days there might be some macro blips, if you will, that could upset the narrative for the short term. But I think we're really looking at earnings to continue to see in the second half of the year, will we get the guidance to be slightly better to account for the fact that earnings estimates have come down a little bit in the first half.
Guys, I appreciate your time.
Good to see you, Shannon.
We'll see both of you soon.
Bye.
Shannon, thank you. Adam Parker, thanks to you as well.
Take care.
Disney's big board battle entering its final stages, and some are saying this week's vote could be quite close, maybe closer than expected a couple of weeks ago. CNBC.com's Alex Sherman is here to discuss what's at stake. That's sort of where we've progressed, right? What we're hearing is that this could be a lot closer than people thought.
Yeah, I think originally after Disney's last quarter, it seemed like Bob Iger and the board were the drivers. Like the shares popped. They sort of threw out a whole bunch of different things in terms of what the future of Disney might look like, new announcements, and investors were pleased. What I think we've seen more recently, though, is that maybe hinging on the ISS and Ethan Jones recommendations just in the past week or two that recommended Nelson Peltz, in fact, be voted on to the board, is that the focus has turned to succession. And I think that's a much stronger argument for Tryon and an activist slate. Because look, it's hard to argue that Disney has nailed succession. Bob Iger has pushed back his retirement 5 different times. He has actually walked away from the CEO job and handed it to Bob Chapek. That turned into a borderline disaster. And now he's back as CEO, and there's no clear succession candidate. So this argument that Peltz getting onto the board can act as sort of an adult in the room when it comes to succession may be fairly persuasive to shareholders.
What happens if Disney loses, do you think? What does it mean for Iger?
Well, look, Iger has said he's leaving as CEO at the end of 2026. Some people believe him, some don't. At this point, if Peltz gets nominated to the board, I suppose you could say investors have said, look, enough is enough now. Like, we need to get serious about this. We need to pick a real successor. You need to leave. And we're going to turn it over now to not necessarily to someone else, because Nelson Peltz is just one person. And even if Jay Rasulo gets voted onto the board also, which Tryon is recommending, that's still just 2 people on the board. But I do.
All right, traders. Thanks for hanging out with me today. It is time to roll out.
In the Disney board, at least.
So thanks for hanging out with me today. Let me see what we got up here.
For Peltz to say, I know the direction that Disney should go in more than Bob Iger. And look, even Nelson Peltz says, I still want Bob Iger to be the CEO of this company. So even he is not making that argument. But at least when it comes to succession, I do think that it would be a vote that you'd have to say, look, Bob, we've given you a chance here. We need someone else in here because we just don't trust you alone, even in conjunction with the board at this time.
I mean, Mr. Iger himself.
All right, traders, the VIX has spiked. I don't know why, but the VIX has spiked. Pretty non-eventful day of trading today. Hope you guys made some money. We're going to keep this short, see if the market flushes at the end of $8 contract here. We did make a little bit of money on Target, and we made some money on Boeing shorts earlier today. So overall, not a terrible day, but could always be better. Don't forget to subscribe to our show here on Tradecaster. Stay tuned for like the world's biggest boot camp. Looks like we're going to be doing a course on some basic option trading. So just make sure you guys come back, subscribe to the show, give us any feedback. We appreciate you being here, and I appreciate here being with you. So let's see if we can come back tomorrow and do it all over again. All right, traders, have a great one, man. I'm out.